Morning, everybody. Good morning. Listen, we are ready to start, but we have one panelist who is an RBI member, so we can't really mess with the RBI. So we'll give them another few minutes. We understand that he's not that far from here. But nice to meet all of you. I'm Sanjeev Anand. I chair Cedar-IBSi Intelligence. Why don't I take, in any case, I was going to make a few comments this morning, so why don't I take this opportunity while we're waiting for the panelist. And I think what we are doing on the schedule is that, of course, Chetan has this fascinating presentation on digital banking trends, which is very, very insightful. Short of getting a standing ovation, but that's a separate issue. But I don't want to delay the panelists because I think one of the panelists is from Revolut, who's coming in on a video link from London. So we would rather get the panels going on time. And then during the day, we will find an opportunity for Chetan to kind of do his presentation. Yeah, I'm sure he understands. Anyway, he has no choice. He works for the firm, so that's what it is. All right. Listen, this topic of digital banking, I know there's a bit of conversation over the last 6 months to 12 months about, especially around FinTechs, because FinTechs generally get related to the concept of digital banking, especially from a B2C standpoint. That winter has come, winter is coming, we know valuations are off. I saw a news report day before yesterday that the VCs are not going to pay their bonuses, which, that happens rarely. So while I think the investor community is going through some level of correction in terms of valuations and exits, that's really more of a situation where there's been excess capital to invest for a long period of time. And it really has nothing to do with the digital banking opportunity in itself. And I think for many in the room here today, some are bankers, some are obviously in the tech space themselves. I mean, the underlying fact is that this is the new industrial revolution. And digital, the Internet of Things, et cetera, you see conferences on automobiles and it's conversations not about the axle or the engine, it's about the chip. And it's about connectivity of the vehicle. I mean, it's fascinating, right? So I think it's all, it's all a given that, banking is going to be digital banking. Obviously, the starting point generally tends to be retail because the complexity is lower. Of course, you need to win customer trust, especially on the liability side, that the balances must not change every morning. That is not true. But once you've kind of created an error-free environment, and this is not very different than, say, 35 years ago, I remember I used to consult in the US for Chase. And I think ATMs were launched in the mid-'80s. And I remember back then I used to do, ATM was a big deal. We used to kind of figure out ATM strategy for New York City and around the US. And we used to always worry about, that people would not go from the teller line to the ATM because they were worried about errors. And literally at one point we had to do a lottery system. That we had the security guard who used to stand in the branch would say, if you switch from the teller line to the ATM, here's a lottery ticket and you could win something. And it almost was a campaign for 6 months that actually moved customers to one channel to the other. So, as I said, the human behavior is such that every time you do something transformational, and I would say that ATMs in those days were, just as transformational from a mindset perspective that digital banking is today. So I think that transition is obviously on. The number of customers that are obviously banking digitally is growing quite significantly. I think we all need to thank the telecom networks and the data networks because without that, nothing would exist. I'm not saying that because I'm historically a telecom strategist and consultant, so justifying my background. But the digital backbone and the data backbone is obviously making this feasible. And then, of course, as technology has become cheap, the affordability on devices has become so much more. I think, every time I was doing some work a year or two ago for a very large Indian bank, where I was, trying to define digital success for them. And even though it's an obvious answer very often, I think we all know that the back office has been digital for a long time. I think we've talked about STP and straight-through processing for many years now. I think we all know today that truly digital is really digital customer acquisition, digital KYC, digital credit, and I think that's the trickier one. It's easy to do the liability piece rather than the asset piece. And obviously, digital back office or ops, right? So obviously, I think the correct definition of a digital customer is it the customer digital end-to-end. And I know it's happening a lot. A lot of this depends on the regulatory runway, because some countries have chosen a different path. I think in the Indian context, it's been payments, licenses. In some other countries, it was digital banks. So it depends on the regulatory runway, but net, I think the acceleration of digital banking in the retail space has been very, very fast, and many countries are fairly mature levels now. I think Shekhar is here today. He understands from Kotak. He knows that the corporate piece generally tends to be more complex because products are more complex. So the transaction banking piece obviously has greater complexity, more documentation, higher risk, more credit complexity, and so on and so forth. But just as Kotak, and we have other clients in other parts of the world, I think the system vendors also are learning through the process. So that is also happening, quite well, right? So I think, all in all, I think the conversation today about digital banking, other than my making some opening comments on where the journey started and where it may go, what I'm looking forward to are fairly healthy and fairly complex conversations for the day, because I think it's past, the first phase now to the next level, and that has its own complexity to look at. Of course, we have to thank the government of India for creating the UPI platform in this country, and I think it has really become it's a shining star, really. Around the world, when you talk to other countries, they want to either use it or emulate it in some shape or form. And so I think that's been a great opportunity for us. I think the last comment is, of course, there's always a conversation on the underbanked or the unbanked. And we may think that's only true in India, but that's not true only in India. There are in many parts of the world, believe it or not, there is the underbanked and the unbanked. Right? How do you pull them into the banking system? The obvious benefits of it, I think we all know. So I think it's very exciting times. I'm again reminded of the mid-'80s, and I'm sounding a little old here because, I remember the ATM revolution back then. And to be honest, that was around the time actually the telecom revolution also happened, the digitization of large switching systems and networks. And so I almost feel like it's deja vu that it's back to 1985. So anyway, it's nice to have you all here. I think we have an exciting panel for this morning. I'm not going to do the introduction. I have somebody who's going to do it, but I look forward to having you all here through the day. I know the panelists and I know the Cedar-IBSi team members are going to do their best to make it as interesting as possible, other than song and dance. 30 seconds on the firm. Some of you know us, some don't. We've been around for a very long time, founded by a Harvard professor, Robert Kaplan, who created the Balance Scorecard, which is a strategic framework. So Cedar has been around for over 30 years. I started in the US in the mid-'80s in Chicago. And we have a very significant financial services and FD consulting practice. We bought a company called IBS Intelligence in the UK about 10 years ago. They'd been around for 20 years. And so I think the combined, and they're a FinTech research advisory firm, a mini Gartner, so to speak. So I think the platform between the two actually for the conversation that we're going to have today is quite deep. And I'm hoping that the Cedar and IBS moderators show that competency. But enjoy the day. See you around here. Thank you.
Thank you, Sanjeev. Good morning, ladies and gentlemen. My name is Ram Kumar. Ram, I'm a senior partner with Cedar and IBS Intelligence. For the purposes of today, I'm also happening to be the moderator for panel 1, which I would like to start with. And we have an interesting panel today, which is banking in an increasingly digital world. And I do have the honor of introducing eminent panelists today. We have with us Dr. Naresh Harale, Vice President and Head of Cybersecurity Vertical at Reserve Bank of India IT. If I can have Dr. Harale on stage. Dr. Harale comes with more than 25 plus years in the industry, particularly in IT and information security, data privacy and cybersecurity, doctorate in cybersecurity, and an MTech in computer engineering. Looking forward to listening to you, sir. Our next panelist is someone who's been more than 25 plus years in the industry as well. So it's a very strong advocate of digital banking and its impact, particularly in SME. I'm going to quote from one of his mantras that he posted in the social media, and it goes like this: imagination is everything. If we can imagine a future, we can create it. Please put your hands together to welcome Shekhar Bhandari, President, Global Transaction Banking at Kotak. Welcome, Shekhar. Our next panelist is someone who's also started his career with RBI. More importantly, he was the head of product development at NPCI. We're talking about UPI payments today, and we have someone who actually was heading product development at NPCI. The tagline on his profile is also interesting, and I'm very, it's important that I quote it here because it's going to be relevant to the discussion. He says, "Trust is the foundation of payments." Please welcome Vipin Surelia, Head of Risk Services, India and South Asia at Visa. Welcome, Vipin. May I also have on stage the Chief Revenue Officer of Cloud4C, Deep. Deep started his career in '93, worked across IBM, HP, and SAP, and he was formerly the President and Managing Director for SAP India. Welcome, Deep. We also have a very, very important member on the panel today who's joining us from many miles away. Can we have Felipe on the screen? Hi, Felipe. Felipe is the CIO and management board member at Revolut Bank. He's been 25 plus years in the industry. He was formerly with Santander Group and many global IT firms. More importantly, Felipe is a mentor and an advisory board member of Cedar-IBSi FinTech Venture Capital. So thank you, panelists. So I am going to start this discussion. I mean, obviously the topic is banking in an increasingly digital world. So may I actually maybe start with you, Shekhar. How do you define this quote unquote increasingly digital world, and particularly in the context of banking and the rapid transformation it's going through?
I think I start from what I used to do as a student, and I used to go to a branch to open a bank account, used to take around 15 days to open a bank account. It required, I think, a good amount of training and learning for me to understand and then do a transaction. If I wanted probably 2,000 rupees at that point of time, I'll have a check return, take the check, go to the branch, stand in a queue. If it is a modified branch, will have a token. Otherwise, I'll wait for my turn, which can take 20 to 25 minutes to get the 2,000 rupees. And I'll be delighted at the end of getting the 2,000 rupees. And just see, I think, the way we have moved across now. You try to open a bank account in 3 minutes. You open probably 25,000 and 30,000 of them every day. I think as an institution, I can tell you, and many institutions do it. You would like to not go to branch for at least 365 days because you may not have the purpose to visit over there. Unless and until you are a business banking customer and you need to have a few documents to be submitted, I think the physical presence actually may not be required to be over there. You can do everything. If you are borrowing, the branch people will come at your place more for assessment. This again I call is the mid-traditional world rather than the proper, the new digital world, where I think that thing also may not be required. And what has happened and how it has changed comes to the fundamentals which has changed across the world. I still say a few developed countries may see, I think, India significantly ahead in terms of their thought. And it is a factor of the infrastructure, the rails, and I think the stack, which has got created.
Brilliant.
I use a few letters, I think either A, B, C, D or JAM, JAM, and both are important. Since you're coming from the breakfast, I think JAM becomes more important. And over there, you will say J stands for Jan Dhan. I think when you had very less number of people, less than 30% who used to have a bank account, and you had a Jan Dhan scheme where the number moved to 65%. You actually doubled the entire take, and with the increasing population. A stands for Aadhaar, which is the, and generally I think when 1.3 billion people have a digital identity, probably I think 50 odd million which get transacted every day. I think that's where Aadhaar get used in various forms. And there are 5 million authentications which happen every day in terms of eKYCs in various forms, is where I can tell you the scale of Aadhaar. And M stands for mobility. I think Sanjay very rightly covered. I think he has seen all the transformations and revolutions and has been instrumental in even guiding, I think, many of them, including big Indian partners, the way I think mobile came to India. You will realize that something which used to be considered as a privilege, I think, became a necessity. And from a necessity, India has the highest number of smartphones as well. Forget, I think, the world. And why? Because that becomes the instrument to transact. That becomes the instrument for entertainment. That becomes the instrument to, I think, to do whatever you want, whether it is buying, whether it is hearing, whether it is speaking, whether it is even as good as entertainment. I think your entire IPL part, I think, if one were to see, and when you have 1.6 to 1.8 crores customers watching it every day, you say that I think it is thanks to the three parts, and mobility becomes an important partner in trying to take it further. I complement this with A, B, C, D. I think A for me is the way the AI world or the artificial intelligence, I think, came into part. It was always there. I guess we come from an Indian community, and think we like making codes well. We decipher it well, and the world thinks that I think we understand it significantly better. It is there in our genes, so I can say artificial intelligence also I think comes as a natural advantage. And when you have that piece in now branded as a good tool, I think you are able to move to the next level. I think B stands for a blockchain, I think a future technology, but a solution which is, I strongly believe in it's the technology, the security, and the scalability, I think, which is possible. I think the C stands for cloud. I think it has changed the way the world has seen in last 5 years, and I think the way the future is going to be. And I think D stands for data, and the entire, I think, the big data part which happened. And a combination of JAM and ABCD is where I can call the world has become digital. India has become totally digitized. Were there versions of JAM and etc. in the other parts of the world? I think M was there. I think A was there. I think J relatively, I think, is there, not there, but it is the stack, I think, which I can call the regulatory framework, which helps to combine, I think, ABCD with the JAM.
Wonderful, yeah. This is a new lexicon for this, the whole day's discussion, I would assume, yeah. This ABCD that you put on the table. I could see Deep is already enjoying, cloud is in his genes. So you could see that the definition of cloud is part of the lexicon. But I have to, before I come to you, Deep, and I have to take this to Vipin first, right? I mean, Shekhar talked about the rails that have been put on the, the infrastructure that is actually creating this whole drive. And one of the topics we're talking about today is how payments has actually been driving the digital banking agenda, right? So if you were to actually share your views on how this whole digital payments has been the cornerstone of this transformation journey, your take on that.
Thank you. And as Shekhar shared his journey, so I also started my journey in the last century. The only instrument I saw was check. He went to a branch, I went to work at RBI, where I used to work in a check shop. We processed, and guys, you'll not believe it, over 1 million checks in Mumbai alone. And when there were dividend warrants, interest warrants issued, when salaries had to be paid, we worked almost 24 hours. There was no ECS, there was no EFT, there was no NEFT, and you would not even have heard words of like Comet, BankNet, etc. There was no RTGS, there was no LinkedIn, there was no Twitter, the only airlines, I think, was Air India at that time. Last but not the least, and he spoke about ABCD, there was no ChatGPT. And there were no apps. Today, when I bank, the only bank I know is 811 or iMobile.
Oh, I love it.
I don't know, and he called it outright. He said 365 days a customer doesn't visit a bank branch. I have never visited a bank branch. I have never visited a bank branch in ICICI Bank. I have never visited a bank branch in Kotak's. And now I am part of that 3 minutes experience of bank account opening. So for me, banking is app. But what do you do with that app? And that's where what Ram was mentioning, the payments come in. So while you have created a front end, you have allowed a customer to take birth in the banking ecosystem, there is a reason and a rationale. So he has to invest, he has to pay. So payments become the glue or a connective tissue across what we as individuals do, what our organizations at the end of the month do, and we love that single credit we see in our bank account at the end of the month. And Shekhar is again a great proponent of SME business. What we are now seeing is, while the retail has evolved, it's the B2B business which is getting more hungrier for digital payments. And it's just not domestic, it's cross-border is what we are seeing. 3 key trends that we are also seeing from a payment perspective, all driven by digital banking. We are still finding more and more people coming in the ecosystem, in the infrastructure. And for them, inclusion is a very empowering or a powerful tool. That's one. Second, we are also seeing, and when we talk about users coming in, we are not just talking about people like you and me. We are talking about merchants, and that's why I mentioned to LinkedIn's, Twitter's, that blue tick did not exist. It's a new opportunity which is being created. So those are the kind of things that are happening. The merchant itself, and COVID did provide a big push to digital payments and digital banking. They were also trying to become a part of the digital ecosystem. So they are also very much there. We are seeing new payment flows. It's just not about cards, it's about QRs, it's about mobile payments. It's about you feeling very safe and secure just to tap, scan a QR instead of handing over your card, and that's where trust becomes important to the merchant. So that's the second segment that we are seeing which is evolving. And it's just not merchant, it's just not individuals, it's government also who has to pay and receive money. And they are also looking at the flows. Again, front end is banks like Kotak, ICICI, State Bank of India, and government either being able to disburse money, which is happening in millions of records in DBT, or being able to collect money for the services that they offer. While you are traveling on a toll, so you just go through a toll highway today without having to stop, take out cash, etc. How it is impacting the banking industry, and it's a big impact happening both on front end and back end. So I need to create an app where I need to start giving those features to the user. And then I also need to start looking at my back end on what data to store. Do I have a consent? How do I use that data? So all those data consent architecture debates are still evolving. It's not a closed chapter as yet. That's one transformation we are seeing, which is happening in banking. The other we are seeing is partnerships. So there are FinTechs, there are old legacy banks who have seen many evolutions of how banking has been through and how that partnership can grow. Third is to drive home the inclusion, how I can use that data. So while on the front end, there are new flows which are emerging from a banking perspective, what is also becoming important is how do I leverage on partnerships, how do I leverage on technology. Last but not the least, as users, we have got used to a 24/7 into 365 days banking. So while Shekhar spoke about JAM in a different context, JAM is also becoming a peak period when banks are seeing transactions hitting, when the IPL match starts, or when there is any event which starts happening. So how do they cover themselves from a 5/9 perspective? So that's another challenge or an opportunity that is emerging to banks and service providers.
Thank you. Vipin, you touched about inclusion, you talked about environment that enables safe and secure transactions, right? And I want to take that question to you, Dr. Naresh Harali. You know, we are talking about, like Shekhar mentioned, we have, close to 2,500 UPI transactions per second is what I'm told is we actually recording, right? And we're talking about having them seamless, talking about convenience and experience for the customer, but we also need to keep the environment safe and compliant. So how does a bank and what would you think the bank should do to actually ensure we balance between safety compliance and what would be seamless and customer experience?
Thank you. Thanks for inviting me on this panel. Basically, the question is very true. So 3-minute journey is very important. Same time, keeping customer trust or consumer trust is very important, and that lies with the bank or the institutions. The infrastructure part, I think everybody is trying to put forward these baby steps to enhance the digital security, the consumer security, platform security, everything is they're trying to build. But doing all this, who is going to give the confidence that yes, as on today, we are safe and secure? So it is a continuous monitoring is required. The seriousness while meeting the compliance requirements. So every regulator is putting up the cyber security framework, data security framework, privacy, everything is there. But implementation part is the missing link, which I feel, this is my neutral opinion I'm trying to share. always trying to showcase the, fully compliant. So fully compliant means is that we are trying to achieve everything is safe and secure, or we have to do something plus plus, right? So one important aspect to the compliance is, yes, regulators are watching. It could be the IDA is there. There are various regulators. The RBI is there. They are continuously monitoring the compliance of your security, compliance of your systems in line with the requirements. But I think if you look back and see, a lot of cyber frauds are happening, right? How we are ensuring that each and every consumer is not in the tier 1 city, tier 2 city. So we are reaching out to the individuals, every consumer which is sitting last mile. So I think awareness has to be driven in a very proper way, continuous way. The continuous modus of operandi has to be communicated. I mean, just 2 days back, I heard is a technical guy whose brother is lost 3 lakhs rupees. So what exactly happened? Just an example I'm just trying to quote here. For a day, his SIM card is disabled. And within the 24 hours, the entire money has gone out of his bank account. When he visited the actual, Airtel and the gallery, he found that his SIM was not working. And they have just enabled the card and immediately started receiving the SMS. So continuously modus of operandi is continuously changing because of digital transformation and the technology evolution, dynamism in the technology. The same technology is available to the fraudsters. So, banking as an enterprise, we have to look at the aspect, what is the landscape, how threat landscape is changing from consumer perspective, and keeping the compliance intact. So we have to do a lot of things. Maybe we should look at zero trust as a network, trust but verify. Just the simple things we should start doing.
I think this consumer is the key here, right? There's expectations of consumers that are driving the whole directions in which banks are moving, and that's my question to you, Felipe, and I want to bring Felipe into this conversation. I think we are talking about digital banking, and a lot of experiences that customers are expecting is actually changing the way banks are looking to realign their offerings and how they take it to the customers. Your take on this, Felipe, from a global perspective?
Yeah, absolutely. So first, thank you very much for having me. It's a pleasure to be in this top-notch quality panel. So I would like to refer to 3 principles, and they are really basic principles. Sometimes with all this technology and digitalization, we forget what are the key priorities we need to do in banking. So the first one, which is probably the most important one, is as a customer, I want the banks to serve my needs. Okay, so banks should solve real problems that people have in their everyday lives. Sometimes we thought, the problem with so much technology and so much you can do with technology is that you could do a lot of fancy features that perhaps they are not really adding as much value as they should. For that, then you need to design your products and processes around the customer experience, around the customer needs, so that you make sure that you serve them well. And also, now with technology, you need to understand as a bank the life cycle events, the particular experiences that customers are going through, because we see how financial services are embedded into those life cycle events, be it buying your dream house or travel internationally or shop around for different insurances. So it is important to understand that experience and also embed the financial services, your products and services within those experiences. This is principle number 1, serve customer needs. A second one is around data. And this is not about artificial intelligence, ChatGPT. It's about using data smartly and efficiently. So things like, don't ask me for data I have already provided, or don't ask me for data that you can actually deduct from my interactions with you as a bank. That data that you can extract from how I use the app, how I use the web, my geolocation, the patterns that perhaps are followed on a monthly cycle, and also use that data to make your offering relevant for me as a customer. And where possible, where sensible, try to personalize that offer. The great potential that being able to store and process, to understand the data and build models around it, it's huge. But then you need to do the investment. You need to do the solutions to actually understand that data, gather it, curate it, and then use it for a real purpose, in this case, to understand customer better and propose them more relevant solutions. And also the data can be used in that sense to make the experience seamless, to make the experience much simpler for the customer. So and this leads me to the third principle, which is a very basic one as well. Keep it simple. Don't build fancy, complicated, long processes. Keep it simple in the sense that it's convenient, it's very intuitive, it feels even natural to go through the process, but also very important, coming back to the principles that were mentioned at the beginning, make sure that there is no service disruption. Nowadays, in the digital channels, you need to be 24/7. There is no room for planned maintenance or for periods of time where your services or your app is down because you are doing some intervention in technology. No, modern technology allows for you to have, a continuous service, and customers expect that. They don't want the app not to be working. They don't want some specific features not to be available at any given time, wherever they are, using the channel of their choice. So as part of that, keeping it simple, the ideal situation would be one where actually the financial services, the banking products, are so embedded into the experience that the customer is going through that is even transparent, that sometimes you don't even realize you are consuming a financial service. So if you are buying, I don't know, a travel package, you are going internationally, the best possible way to make the payment is one where it takes place automatically, taking your payment, your choice of preferred payment, perhaps with an account or a card that you have already provided somewhere else when you sign up for the service. And then when you check out for your travel package, the payment is taken automatically, perhaps using some data to authenticate that is already kind of embedded in the app where you have authenticated yourself. So if you keep it as simple and as natural that actually the customer does not even realize that is consuming a financial service, well, that would be the best ideal scenario, at least from a customer point of view. So as you see, we are talking about basic principles that technology and the digital world makes much easier to fulfill or to meet. So serve customer needs, use the data smartly and efficiently, and third, keep it simple.
I think that's a very insightful, piece of advice, I guess, for a lot of people here in the audience. Don't ask for data that you already have with you. Keep it simple and keep the customer needs at the center of the discussion, front and center of the discussion. I think that's, if I was to take that part of the discussion to you, Deep, and I think, a lot of the expectations that Felipe just talked about is from a consumer standpoint and apply for every customer, right? And you've obviously been engaging a lot with, quote unquote, the B2B segment or the institutional segment, if I may say, corporate and SMEs. How do you see the digital banking opportunities unfolding, to customers in an institutional angle, and more particularly because I do know that from your, yesteryears in SAP and so on, you could see a lot of the point that Felipe made of don't ask for data that already exists becomes so relevant in today's context. So, your take.
So, I think, thank you again for the panel. I think it's a very enriching discussion. And I was just reflecting back, and I think I'm the only non-banker. My attach shows that. So I hope it's not any offense to anybody. And I'm not going to talk about technology. I think there's one thing, we talk a lot about digital technology and things like that. But fundamentally, I believe, what Felipe said is exactly this, what is happening. It is about the experience. how you're transforming the experience, how you're that includes your citizen, if you're in government services, G2C, your consumers, if you're into banking, or your customers, if you're into B2B business. And to change that experience, right, like asking for data KYC 5 times, right, for 5 different business lines, right, getting the same validation done. I might have, as a B2B company, I might have 5 business lines, but my customer set could be the same. The persona could be the same. I might end up asking the same persona through different divisions 5 times the same information. So is that improving that experience in the B2B world? Similarly, when it comes to payment, because obviously there is a lot of risk and controls you have to maintain. But how do you not take that to your consumer? And when you have to deliver to the consumer, it is not just about the point in which you interact with the consumer or the customer. It is also your internal processes. And I'm also a great believer that it starts with the internal journey, not just with the customer journey or the consumer journey. Because as an employee, what is the experience you go through when you have to, let's say, in a B2B situation, when you have to do a purchase requisition for a office equipment? Is it a same 45-day process or 90-day process? Right. Well, again, you have to go through all the checks and balances. So how do you transform your entire employee experience, your ecosystem experience, right, and your consumer experience? It is about taking everybody along in the journey. And in my sense, if I take an outside-in view, as a service provider in the banking industry, I think the entire ecosystem has to evolve to provide a consistent experience of the provider, of the main player of the ecosystem, and the entire consumers and subscribers.
So it's not one entity, but an entire ecosystem at play here.
The entire ecosystem has to be upgraded and be provided the thing, including your internal stakeholders.
Got it. So Deep, I guess I'm going to actually have my final round of questions, but I like to do it slightly differently. I'm going to have one question, and this is the same question to all the panelists. And if you actually were to actually make a prediction, I'll start with you, Deep, on how the outlook would be in the next, let's say, 2 to 3 years. And what would you think we all should be watching out for? What would your take be?
Again, I'll give you an outside-in perspective. A lot of things has happened, as everybody knows, on the retail banking side, on the consumer banking side. But the entire B2B, whether it is a B2B commerce, B2B payments, I think a lot needs to happen. And the opportunities are huge, right? Whether it is simplifying the effort while keeping it secure. I know, in B2B, the risk of threats, risk of getting hacked is also higher, this thing, because of transaction volumes and things like that. If I have to say the entire area of whether I'm a buyer, whether I'm a seller, whether I'm a consumer, whether I'm a user, that entire journey of a B2B can significantly improve over the next couple of years, and that's the biggest opportunity.
Name of the game to be B2B for the next 2 to 3 years.
I personally believe, because a lot has happened on the B2C side of it, especially in India.
Right.
The B2B side of it, from a banker's perspective, is a big opportunity, and which can be pretty much be unlocked.
Interesting. Felipe, what would your take be? The outlook in the next 2 to 3 years, and if you had to pick what you think would actually be something we should watch out for?
Yeah, so it's always difficult to predict, no? But I think I will go for something around data, using the data smartly and widely. So let's say someone would call it perhaps machine learning and artificial intelligence, but these are perhaps buzzwords, no? So it's about going beyond that hype of ChatGPT, OpenAI, and actually find real use cases, define them, develop them, and extend them to a place where they can deliver great value for customers. We're already seeing some areas or domains where this is being done, and the potential is great. So look at credit decisioning, for instance. We are seeing how this is being applied for credit scoring for people, for consumers. But talking about B2B, Well, perhaps we will see the same being applied for small businesses, where we can do credit decisions in an automated way, in a real time, using all the pool of data that exists from so many different sources, or detecting fraud in real time, or helping prevent financial crime. So I think that for me, one of the spaces to watch out is these real use cases where, building data models using the vast quantity of data that is available can actually deliver real value for customers, both consumers and businesses.
Interesting. The real unlocking of the value of data is what you see as the area to look out for. Vipin.
So I don't know whether you are trusting me to crystal gaze. So, and with ChatGPT there, and my college-going son comes and tells me he got this answer from ChatGPT. Very difficult, and I would not want to hazard presenting a Mona Lisa with a black border to this group at least. On the opportunity side, I'll go back to what Philippe said, and it is again linked back to what I fundamentally believe. Trust is the foundation of payments, which can happen in two ways. So one is, because we are getting new users, customer experience simplification is very important. And we collectively as a group who understands payments slightly better than what we believe the billions of device holders doing banking do, we should continue to create awareness for them. We should continue to educate them on the perils of what can go wrong. That is one. Second, we also believe the pie is much, much bigger. So there is an opportunity while we compete, and I speak on behalf of all networks and our ecosystem partners, we have to collaborate. And trust me, we do collaborate today also, but I am looking forward for an opportunity to collaborate more, especially on the security and risk side. So it's not a shame that you got hit by malware. It can happen to any one of us. And trust us, as networks, our first port of calls are two, whenever any incident happens on a single network. So we reach out to our ecosystem partner and to regulators and Dr. Harale's team. That is one. Second, we also reach out to each other and say, this is what has happened on our network. Has it happened on your network, or is it going to happen on your network? So creating that foundation of trust, deepening it, is a big opportunity I see in the next 2 to 3 years.
Very interesting. Creation of awareness, collaboration, and being sensitive to what could actually happen, not just to your neighbor, but to yourself, right? Thank you, Vipin. Shekhar.
So if I were to paint a picture a bit longer, I'll
Please.
say that the credit to GDP ratio in India is around 47%, and probably 2030 odd, I think you should move around 100%. And in my mind, that will have the significant opportunity for everything which I spoke of, which is ABCD, but largely for, I think, data. And in order to move that path, for India to grow from 3.5 trillion to, I think, 8 odd trillion around that time, it will be important that we take care of security, we take care of privacy, we take care of, and we ensure the trust part goes up. What we saw in last 3 months was a significant lesson on trust and on risk management. And in my mind, it will be, I think, rightly probably echoed by Doctor as well, that for them, I think you will innovate, you will simplify, you will use the best tech to ensure that you are able to solve the customer issues. And there is a business case and a business opportunity for that. With whatever is available, to have a structural way to address security, to address the trust part, will be a joint responsibility across of all the players in the ecosystem, including educating the customer. That will remain, if you were to ask me, the biggest agenda as starting to educate and be responsible.
I think it's symbiotic, isn't it? It flows one into the other. The more you educate and more you create, it actually helps in augmenting. And I think that reference you made, Shekhar, to this credit GDP ratio going from 47% to 100%, I mean, that's like a very critical takeaway. That's the real proof of the pudding. If we were to do all of the stuff that we talked about, B2B and data and the security, then you should be resulting in that kind of an impact.
And the number of people who will be earning more than $35,000, which is again taken, I think it will rise 5 times in that time period from probably, I think, 5.2 million to 25 odd million. And for a per capita income for India, I think, etc., will rise again 2.5 times, from $2,500 to probably $5,500. So I think all these things mean that people need to be more educated, and you take care of privacy, security, trust. The world is moving to a situation where brand, I think people are happy to trust if tech backs you. People will move away from the brand. But it is important that you are agile, but I think remain trustworthy for a longer period of time.
Very interesting. Be aware and beware. Dr. Harali.
Yeah, I think more and more the digital landscape is increasing. So maybe financial institutions should focus on using the cyber threat intel proactively, so that will not impact your consumers and the customers. I think that's because ultimately the entire assets being kept with the banks, and they know that it is safe, it is in safe hand. So proactively, because cyber fraud or cyber risk is going to be a business risk. It is business risk now. So we should have the various plans and protection mechanisms, so which will increase the trust value, which will increase the brand value.
Trust is the foundation, as going back to your definition, Vipin. All right. I guess we will, that interesting takeaway, if I was to summarize, I guess, we were to say that if you have to have the foundation of trust, it allows you to actually have a more meaningful exchange of data that actually is used without having to be repeating it, and that being put to use with what we see in B2B context, which obviously is the name of the game in the next 3 years. But you got to be watchful of what could actually be security concerns that we should be sensitive to. I think a very, very interesting takeaway from this discussion sets the tone for the rest of the day. So thank you, panelists, for being with us today. Thank you.
Thank you. Thank you very much.
Thank you.
Morning, everyone. Great to see all of you here. My name is Chetan Parekh. I'm the managing partner for FinTech practice. So I look after many of these digital programs and projects and advisory for customers. So I'll take you through our perspective, and I've drawn a very, very interesting global to India comparison and what India brings to the table as well, which is quite a huge opportunity. So as you can see from an India perspective, India has started some of the digital innovations very early, very differently. So when you look at the digital banking market, right, in specific, it's a very different market. Normally, Revolut, you heard in the morning from Felipe, they started a digital bank when many of us did not know what is a digital. So India's story on the digital is very different. And if you look at the market, then we'll tell you opportunities and look forward. Just go next. Yeah. So easiest thing on the channel. Now, when we say digital banking, it means different things for different markets, right? But India, predominantly a very, very large population, digital banking starts with channel. And internet is still quite a popular channel, followed by mobile. Mobile, like any other market, thanks to smartphone devices, is growing very, very fast and catching up. And then there is a whole omni-channel expectation. Where am I going to, as we heard in the morning, nobody goes to branch now, but people do call contact center and say, I'm looking for this service and that service. So omni-channel gives you a single experience across all channels. You are able to see what customer is trying to do across channels as well, from a bank perspective. Then there is a series of upcoming channels. So WhatsApp is one of the key upcoming channels many banks is implementing. But Metaverse and some of the other smart channels which are yet to come. As all of you know, watches are still quite expensive. Apple Watch or any smart watch is still very expensive. There is no large adoption. But you will see that in Generation Z and Generation M, that trend is fast changing. Watches are becoming much more available, and people do use them for a quick alerts and decisions. So that's what the digital channel is. Go next. Now this is a very, very interesting slide. So all of us think Asia is quite ahead, Asia is huge, digital is big story. So yes, it is 805 million digital user base. But when you look at the Asia user base, see the penetration level, 19% only. So there is a huge opportunity. As devices catch up, internet catch up into rural areas, there is a huge opportunity in Asia. But today, if you see a most matured market from digital perspective, right? It's 47% in Europe, 361 million. Now, of course, reasons there have been different. Europe relatively has an aging population. Getting to a branch is quite expensive in Europe by pulling your car out and getting to the branch. So preferred first mode is calling the bank or using the bank app. So that's one of the reasons when we see in Europe, right? US, of course, very large amount of penetration, 250 million. The key message here is Asia Pacific is likely to be the next big story. Question is, how do we participate in this story? In deepening the penetration and bringing the innovation channels, right? So that's where India is going to play a big story. And the numbers, if you see, there's a huge amount of banking statistics numbers, around 85 million in Europe by end of 2020. So that's number-wise, global story is quite strong on digital. Moving next. So when you look at India, now there are three key different graphs on the screen, and each one of them is interesting. So what you see is we are 35 million user base today in India. And it's going to go into 50 million by 2025. So very, very healthy growth. And if you look at these are every year numbers. So we're talking about 250 million users across India in next 3 years. Yeah, so that's the story. Now, thanks to UPI and all the successes, as of now, 48 billion transactions in this year. Only January had 8.2 billion transactions on UPI. So it's literally a hockey stick, and that's becoming almost a benchmark for the world. So payments, India is #1 today, followed by China and US. So UPI story clearly shows us that if you give a service in India well, simple, the adoption can be huge. And that's the story which you see on UPI. But if anybody believes that lending is tough in Indian market, you don't have data, you don't have alternate data, almost 80% of global lending apps are Indian market-oriented apps. And see the growth, 5x growth on digital lending using apps. Now, some of them may not be completely straight through, some of them may be just an application drop, some of them may be instant decisioning apps. But the story is digital lending is already on a grand success from an India perspective. So clearly shows huge market potential and a big story both from liability and assets when it comes to banks. Moving further, now let's look at India banking perspective and type of licenses we have. India is again a unique compared to the global because I see across markets. So we have traditional banks with innovative digital arms like Kotak 811, a huge acquiring organization. Yono from SBI is a global success story. How can a oldest bank have such an interesting, innovative channel. So there is a digital brands which is going to become a mantra for Indian banks. Now, do you have 1, 2, 3? That depends. You have one for retail, one for SME, one for corporate. That again depends. Second, there's the whole payment banks, which is licensed in India, delivered. Again, a huge success story. But also there are early startups and stops, and AML issues and profitability issues. So everybody's looking towards profitability in payments bank. How do they make money? And then there is a whole neobank. Now, neobank is globally a huge story. Let's define neobank. Neobank is a bank, or rather a fintech, which is having a mobile banking app, but doesn't have a license. So it uses license of a financial institution. So you will see FI powered by Federal Bank, Jupiter. So they do source and very specific business they allow to do in the front office perspective. Neo. So these neobanks are today operating with third-party licenses of financial institutions. So these are the three modes. You can have a digital organization within India. But what's changing, moving next, is again, there are some fundamental drivers to how the story is driving. You look at the macro factors. Internet penetration, one of the fastest growing. Government. Now, if we are undermining our government initiatives. Globally, countries are challenged where government has other agendas to do, and they're not really focused on digital. In India, government is focused with Jan Dhan, Shekhar spoke about earlier, which can create a huge demand. And that's where government is driving the show. FinTechs, there's never a better FinTech market compared to Asia and especially India. So huge amount of 20 to 100 startups. So you have a lot of FinTech story. And COVID has, of course, accelerated globally the trend. Now, when you look at bank factors, I think very, very well said by Doctor in the morning, improved security. Now, one key thing people keep in mind in digital banks is security. They're very, very worried in a minutes of seconds, money goes away. So how do you drive improved security and cost effectiveness? And cost effectiveness, again, is a big story. All the banks, while such a large amount of growth, don't want to ramp up the cost structures. So that's, again, a bank's factor on supporting. And customer. Customer is always, as Felipe mentioned in the morning, experience and convenience. So experience, which Dave mentioned, and convenience. So convenience is a big, big story from customer perspective. So even if you believe that a 50-year-old or a 40-year-old is not going to switch a bank to digital bank, that's not true. It is demand and convenience. If solution is available with a lower fee structure, people will move from a traditional banks out. So this is the things which are driving Indian market. Moving further, RBI is not behind. When you look at the, again, opportunities, go next. So there are 4 key opportunities when it comes to digital. Unbanked, we spoke about in the morning, the new generation of users and communities. You will see Generation Z and a Generation M. The digital SME, the whole SME, single obligor or 2 obligors kind of organizations who wants asset but at smooth. They don't want to make 4 visits and 5 visits. And the whole FinTech, how you launch it. So these are the 4 key opportunities when we see India market. Go next. Now unbanked, we are talking about 267 billion is sitting in dormant accounts in India. Right? So there's a large amount of dormant accounts. If you look at a study which recently published, reasons bank accounts are inactive is financial institutions are far too away. So people believe their branches, which we don't want to visit, they still want to visit and they don't believe it's there in their taluka or region. India has set up 75 digital banking units and 150,000 post offices. So the reach is changing, financial inclusions, a big story in India. So that is something, anyway, India has a very less amount of financial institution compared to your size of population and unbanked. If I compare globally, the number of banks in the smallest countries and number of banks you have in India is a very huge amount of unbanked situation. So this is going to fundamentally help digital. Go next. Now the generation. So younger generation, and again, there are 3 generations in younger generation also. So 18 to 29 as the bankable age, almost 47% of Indian population, bankable population is sitting in that bucket. 36% is in 30 to 39. So people still believe they're young at heart till they're 39, and that's the next generation of population. And the 40 to 49, close to 15%. So Generation Z and Millennial, as the first 2 segments are called, they're heavily reliant on smartphone, convenience, they don't have time, they don't want to go to bank, not because they don't like a tea or a coffee there, it's just they don't have time, they're too fast. They might as well enjoy a Netflix series rather than going to a bank. So that's what they are looking for. And EMI and installment payment companies see younger generation has a very different habit. Our parents had an habit, save money, keep money for future. But younger generation is having a very, very different perspective. They want to celebrate the life, enjoy the life, even if it means lending and taking their salaries to full expense out. They don't mind. So it's a very different world and a different behavior. So nobody should benchmark based on the past. Move next. SME. As you can see the comparison on the screen, India is one of the lowest, India and Australia are one of the lowest in SME penetrations when it comes to contribution to GDP. So there is a huge demand, and when SME is looking for much more than banking. It's a mom and pop business or a medium-sized business. They don't have many resources, people to go to bank. So if a bank can become an anchor bank, an account, giving banking services around it, it becomes a huge opportunity. And there is an opportunity just clearly 10 to 12 points when you look at the global other markets. And so it's a whole beyond banking services and a single platform. So you will see these platforms emerging in Indian market. Moving next. Again, this collaboration which you're seeing between banking community, and again, thanks to licensing, License Raj in India, FinTechs need banks to launch their services from a neo perspective. Kotak has already tied up with Pine Labs for acquiring. Axis is partnering with BharatPay. So there's a huge amount of these success stories. So if you are not having an innovation lab and you are not looking annually at top 10 innovations you will do in your business and what digital brands are coming to you in the coming, you're not really doing justice to the opportunity. Right? So that's the size of the opportunity. Yeah. Moving further. Again, let's look at what's going to come in future. Go next. Yeah. So as Shekhar mentioned, AI. So AI has been around. ChatGPT has just expedited some of the adoptions and concerns we had on AI. But AI needs to be think as a solution to many complex problems. Customer experience, customer innovations, Internet of Things, again IoT to transform the banking industry. Huge amount of devices coming. All kinds of devices will be in customer's house within the next 5 to 10 years. How do we use them for banking? Felipe mentioned, use data from them. You are using data from them to drive your products, your messages, and so on and so forth. Open banking is little away, but again, that's a major opportunity where banks' products will be sold by others using the services. And metaverse. So gaming, metaverse is a great way to put your brand out there in minds of millennials and Generation Z. So that's where metaverse is mainly to put up your brand into the next generation 3D, mainly used through mobile and VR devices. Moving further, blockchain is going to be a platform which governments and consortiums are going to be using, where you can partner from tech perspective, and gamification, quant computing, and biometrics helps very large communities from digitization perspective. So these are some of the trends we believe you need to watch out for. Go next. Now, digital-only bank. Now, this is a very major step. RBI has received already a Niti Aayog proposal to introduce a digital banking license with limitations. And that's coming your way. This will introduce fundamentally new generation, pure play digital banks. RBI just wants to be cautious, given the payment bank experience and how the payment licenses were used and then done. And last but not the least, go next. The CBDC, the digital rupee which has come in, again, while it's between bank to bank, it's going to go into B2C. Yep. So that I'll just stop there. And this is the key opportunity we believe each Indian bank needs to leverage. And glad to see everyone here. Thank you so much.
Thank you, Chetan. That was very interesting. I wish we had more time. Now let me call upon the next panelist, Sahil Anand, founder of Cedar-IBSi Capital, our homegrown venture capital fund. Sahil, can I please welcome you on the stage?
Everybody, thanks for being here. I'm excited for our next panel focused on the world of investing in FinTech. As you know, there's a lot happening nowadays and there's a lot of talk. I'm excited to invite my two panelists to the stage. We'll start with Tarana Lalwani. Tarana, if I can have you on stage, please. Tarana started her career in the US with Morgan Stanley, joined financial services firm Radian, and she's been back in India for a while, first with Seed Fund on the equity investing side, doing early stage, and she's currently a partner at Innovin Capital, which is a well-known Indian and Southeast Asian venture debt fund. Innovin was founded in 2008. It's invested about $1 billion across 200 companies. They have multiple funds, but Tarana works and leads the Indian fund. Their portfolio companies in the fintech space include companies like BharatPay, MobiKwik, mSwipe, FreeCharge, Slice, and they're also an active investor in across sectors. Welcome, Tarana, and we look forward to chatting. If I can also invite Shashwat. Shashwat Rai is here with us from Avishkar Capital. Shashwat has spent most of his career at Avishkar Capital, which, as some of you know, is impact-focused and one of the long-standing impact-focused funds. He personally has co-led investments in companies like Checkbook, FinancePay, and Cloudwell. And he's also worked with other portfolio companies and co-led investments in Utkarsh, Suryoday, and R1. He has a BTech from IIT Bombay and an MBA from ISB. And for those who don't know Avishkar was founded in 2001. Everybody talks about impact nowadays, but Avishkar has been around a long time. I interact with global LPs who do know Avishkar and the work Avishkar does in India. They're now on fund number 7, as far as I know. And 3 of the companies they've seeded are now on IPO stage and very, very focused on financial inclusion, among a few other areas. Welcome, Shashwat. So I actually, we're lucky with this panel because we have two panelists that come from interesting business models that is talked a lot about today. Tarana represents the venture debt side. For those who've been tracking the space, obviously venture equity has been around and talked about for a long time. But there's a lot happening in venture debt, and the business model is different, and we're excited to hear from her today. And obviously, everybody is now talking about impact and ESG and financial inclusion, and Avishkar has been doing this for a long, long time. And so that's the second interesting business model that we'll kind of explore today. So I want to actually start with the basics for people in the room who would like to be enlightened. Maybe with Tarana, if she can give us, I requested her to give us just a bit of a crash course on kind of venture debt, what the model's like, briefly what made you move from venture equity to venture debt, and what all the noise is about. Because nowadays, a lot of the deals that get announced, there's a debt component and there's an equity component. And so we'd love to just get a bit of a crash course. Yeah.
Happy to start. So quickly, venture debt is, it's actually been, I mean, I'm sure everyone read about Silicon Valley Bank a few weeks ago. It's been around actually since the early 1970s. And as Sahil said, we were Silicon Valley Bank, and then in 15, Temasek and UOB acquired the business, and we rebranded it as Innovent. So we are the oldest player in the country. Now, how venture debt works, and I want to clarify this for everyone to start off, it's not a bridge loan. So a lot of times people think it's a bridge loan between two equity rounds. If I had to put it plain vanilla, venture debt is a top-up to one's equity round. What happens, a lot of these startups are loss-making businesses. They don't have hard assets, so they don't qualify for traditional debt. That's where venture debt plays a role. We say, okay, and it's, of course, it's debt, so it's less dilutive source of capital. We come in, generally we like to come in as a top-up to the equity round. So companies raising 5 million, they don't like the valuation, so they're like, okay, maybe I take 4 in equity, 1 in debt. Or on the flip side, you want to raise 5, but you're getting interest for 4, but you believe you need 5 million, to get to X milestone. Or some companies, we have a lot of brick and mortar models that have a working capital cycle or a CapEx expense. It makes sense to raise some in debt and use that for your expansion versus equity, because equity is relatively more expensive than venture debt. Venture debt's usually a monthly amortizing loan over a 2 to 3 year life period. We have it's as I said, it has a coupon. We have a tiny warrant kicker or an equity kicker that we say where we'll take 10% of the loan amount as warrants. So the way to look at it is you're diluting 10% for that same quantum that you would have diluted in equity, which is why we say, for stakeholders, it makes sense, they dilute less. So if you believe you have an upside to your business, it's sort of a no-brainer. It can help with accelerating your business, experimenting. For example, like Byju's used us when they were doing the Shah Rukh Khan ad. Now, they had money in the bank, but you go and tell your equity investors or your board that, hey, I'm going to go burn 50 crores in 1 month. Everyone's going to roll their eyes. So they decided they take it in debt and amortize the payments and, pay up front for that ad, get the discount that they were getting, and then, of course, we know what that ad did for them at that time. So there are different use cases. Acceleration, it can be used as an insurance policy in this environment. A lot of companies believe they should raise a little extra. Also, as I said, it's non-dilutive. So a lot of companies now actually are getting a lot of interest. A lot of guys are coming back and saying, we don't want to dilute, do we take some debt? And you have to balance that out, because I always say, after all, it's debt, it's serviceable. I expect to get this repayment, unlike equity. And it's, so because it's debt, I can't afford mortality, but because my upside is capped. So that's the balancing act with venture debt. That said, it's been a great asset class. The returns have been phenomenal, no complaints, touch wood. And now what was your second question?
What made you move from the equity side? Because we were talking before this outside, and Tarana was telling me that the equity side was also a lot of fun.
Yeah.
So
I'll come to that.
Yeah.
That's also, just coming to you, actually, the other question you asked is the momentum that
Yes.
debt is getting right now. I think it just shows maturity of the venture ecosystem. Initially when I joined, or even a few years ago, you had to educate founders and stakeholders about what this product is, what's the offering, what's the value add. Now with second-time founders, people, having been part of I'd say the equity ecosystem for the last 15 years, there's a lot more awareness. There are other players in the market. People are seeing the use case. They're seeing the value of it. And so it's a lot more sort of acceptable. And the other interesting part, actually, sorry, to point out to venture debt is, unlike equity where you will have Series A investors, growth investors, late stage investors, we're sort of sector agnostic and stage agnostic. So we come in generally in a Series A and we can play through the gamut. So we start with something small with the company, maybe $1 million check. And then as the company grows, we can do more debt in the company. So our range goes from $500,000 to $15 million. So that's sort of the other sort of, I'd say, peculiarity to venture debt, that we have the ability to play through stages. And lastly, because we're sector agnostic and we don't take board seats and we're debt, we also sort of get a bird's eye view of, we can be in 3 different companies. That sort of, there's no conflict of interest. So it's an interesting asset class from that perspective. And lastly, and then I'll come to why I moved. Also, one other interesting aspect to this is that you can, where on the equity side, you'll do 2 transactions or 3 transactions a year. Here we do like 10 to 15 transactions a year. So it's more fast-paced. Why I moved from equity to debt? I still think early stage equity is very interesting. You get to, I always joke, I don't have a great idea, so otherwise I'd be a founder and build something great. So the next best thing you can do is work with founders. And on the early stage equity, I enjoyed my time at Seed Fund, literally working with founders, and I'm sure Shashwat felt the same way, where literally one of our companies deciding the color of the brand and, getting involved in hiring, like, okay, doing the interviews for them, or what should be the, what should we be charging clients where we come across as premium or mass premium. So it's an interesting place to be. On the debt side, you do not get as involved. But again, it's how, if you have a good relation with the founder, you have that rapport, you can. My brutally blatant answer was that when I would have continued at Seed Fund, they were not raising another fund, and there was a parallel move. You have to sort of be selective. You don't have your options. So I moved from equity to debt. Having said that, debt, as I mentioned, is very interesting from the aspect that you get to see a lot. You do a lot, you see a lot. Like I've invested in 6 or 8 logistic companies. So I get to see very different models, similar models, and then be able to compare them, analyze them. So you get this sort of really deep understanding of a sector or a segment, because you get to see so much in that one sort of business sector. So I think that's the interesting part of it. Hope
Thank
I
you.
answered all your questions.
Yeah, no, thank you. I think that was useful. Shashwat, similar, I guess, question, but for impact, right? Everybody's talking about impact. It's all over the place. There are requirements and forms being sent around. People like you and Avishkar have been focused on this cause of serving the underserved, investing in companies that serve the underserved, financial inclusion for a long period of time. So in a way, at least in India, you defined kind of what's happening in the space. So how, as Avishkar and as you, do you truly define impact investing, and what are the guidelines around impact?
Sure. Thanks, Sahil. First of all, thanks for the invitation. Very pleased to be here. So I think, in terms of the evolution of impact investing, one of the vantage points for Avishkar was that our founder is actually a forester. So he doesn't come from the typical, MBA background or finance background. He was a forester, and he realized that, if you direct capital to rural areas or underserved segments of society, there are still some viable business models which, if they are supported by risk capital, then they can scale. And by virtue of you being investor in those enterprises, you can also, make a business out of it. So it was a very primitive thought back in 2001, 2002, where he wanted to experiment with a lot of different kind of sectors which are dealing with underserved segments. And natural, the top of the mind comes is, areas such as handicrafts or farming, right? And financial inclusion, microfinance. So these are all some areas where hardly anyone else was looking at it, and we started taking bets. Our initial bets were very, very small. The check sizes used to be $50,000, $60,000 at that time because we didn't have money. It took us around 6 years to raise our first $1 million, which in today's day and world, if you ask a fund that if you took 6 years to raise $1 million, people will laugh and say what you're doing, right? So, but because it was such a novel concept, so it required a lot of perseverance. But come 2007, some of these bets started showing a lot of promise, and we got institutional investors who started backing us. And since then, if you fast forward from 2007 to 2023, today we manage about $500 million across 8 funds and investing across South Asia, Southeast Asia, and Africa. But one of the core things which has always stayed with us is that, we always try to identify the mission alignment, right? That's the main thing. And when you talk about mission alignment, it's very hard to put frameworks around it. So we as Avishkar team don't like a lot of forms with a lot of data sitting in it. We are more concept oriented. We try to see, if a particular business model grows, who is the underserved segment which is getting benefited by that? And it's like a value chain participation, right? So underserved segment can either be a producer and a supplier to your business model. It could be a consumer of your business model. So if you are offering affordable products and services, it could be a consumer of that. Or it could be a value chain participant where it's actually enabling the ecosystem of the business model. So across the value chain, there are places where underserved segment can actually come in and contribute. And you can see today, I mean, if you look at not just our portfolio, but in general, any impact investors portfolio, you'll realize that, that has led to some degree of sector identification over a period of time. Agri is one of the large sectors. Financial inclusion is the second largest sector. Rural oriented models are probably the third, fourth largest sectors. Last mile logistics. There are so many areas in a developing economy, because of the kind of population income pyramid that we have, invariably you will find very significant share of models fit in impact investment, which is, kind of a breaking the myth kind of a statement. People generally like to think that most deals are pure play commercial deals and not impact deals. Basis my 11 years in this sector, I've realized it's actually the other way around. We live in a poor country. We live in a country with fractured infrastructure. So private sector entrepreneurs who are solving for problems are invariably affecting a very significant chunk of the pyramid, population pyramid. And hence, many models are geared towards making impact. We just try to be somewhat selective about, the degree, quantum of impact that we want to stick with. But I think even the mid-market venture capital funds, you'll see, if you carefully analyze, a lot of their investments are impact investments. So it's a very broad asset class. It has this perception of being a niche asset class, but it's actually fairly broad.
If I can ask, since a lot of the people here also represent banking technology and banking infrastructure, because we're setting up a fintech fund, I've been talking to LPs who are primarily focused on impact, and for them, banking infrastructure, banking technology is not impact, right? And the conversation ends there. How do you, because you said that the definition is broad and it can technically banking technology then serves retail, and then there are people getting access to the innovation. Does that fit into your definition of how do some of these people in the room fit into that definition?
See, what we have, so we've got, if you look at pure play B2B models, right?
Yes.
Where a particular fintech partner is just developing things for the bank.
Yes.
If the use cases are actually enabling access, a very broad access to a wide segment of population where the status quo solutions are not able to reach there, it's definitely an impact. It's like a levered impact kind of a case for us that, if this technology goes through, the accessibility improves or economics improves, whatever is the argument around it. But you are right. I mean, there is still a significant share of banking technology solutions which will not fit in the classical definition of impact investment. On the other hand, if it's a B2C kind of a model, there is a very good chance that it will fit in the impact investment mandate.
Okay. If we can talk a little bit, Tarana, about, I know Innovin does cuts across sectors, but just how you, because the definition of fintech is getting blurry, and some people define fintech as banking technology, some define it as just what's happening on the B2C side in personal finance. I mean, how do you and Innovin look at your broad framework of what fits within fintech? And then if Shashwat, same question for you when she's done, and then if you can talk about kind of what extra metrics you have when it comes to looking at B2B versus B2C, because there's been a lot of is it a myth? I mean, there's a lot of talk about business models and unit economics being far more feasible and cash burn being less intense. And how much of that do you believe and truly believe, and how much of that do you think is just talk?
Well, Well, I think fintech is a little bit of a blur between banking and fintech. Actually, I wouldn't even call it fintech. I'd say the way to sort of we look at fintech or we classify as fintech is anything that's technology enabled. And if I had to make a spook, it's where they're burning money versus actually building it the profitable way. So it's interesting. You'll see, there's lending, right? One aspect of fintech is lending. Now you have NBFCs who start off day one, profitable businesses lending. Then you have someone who puts a tech angle in, still lending, but our sort of their CAC is higher. So that's a joke we make internally. Yeah. But jokes aside, I think as a broad definition, anything, the word tech, the fact that it can be tech-enabled is considered fintech, where we consider it's a new economy business. And coming from venture debt or from the venture ecosystem, anything that is venture fundable, where we believe it can get to a large scale. And it's sort of disrupting financial services is defined as fintech, if I had to broadly put it. But it is blurry. And that's how we sort of define it. So you have businesses, anything can be fintech, lending, payments, even, B2B technology products like a Lentra or a Perfios, which provide some sort of banking technology, technology to banks. Then there's, of course, under fintech, insurtech, wealth tech. So it's a broad category with lots of pieces to it. And then, of course, on the lending, there's consumer lending, personal loan, BNPL, B2B lending. There's also companies that are doing vendor financing, supply chain. So those are part of the fintech. And then if you really wanted to get broad, I think a lot of the B2B businesses end up doing a lot of financing for other businesses.
Yes.
So that could also classify in a skewed way.
So it seems like I guess you're not biased towards B2B. I think you're open-minded.
No, we're open. Yeah. We look at the business, as I said, from a venture debt perspective. Yeah. When I'm looking at a venture, if I should be lending to a company, there are a couple of things I'm looking for criteria. Is it a business that can scale up from a debt perspective? Where do they have cash flows? In the sense that, does this company have enough runway for the next 12 to 18 months? And are they backed by a venture fund that I can draw comfort from for the DD and governance piece? Because I don't take board seats. Right. And then on the equity side, similar to what Shashwat would do, is quality of founders, business model, are they market leaders, regulation, and those aspects. But fintech is broad.
Shashwat, do you guys have a...
Yeah, so for us, obviously, the top of the mind models are always B2C in some form or shape. B2C, when I say it will be either a retail individual consumer, which is like a mass market consumer, which is not getting those range of services. It could be lending, it could be insurance, it could be liabilities products. In some cases, it's MSMEs, right? So we also say, in some sense, MSME is also kind of a B to small b or B2C, whichever parlance you want to use. So most models that we have evaluated in fair amount of detail and depth is lying in this B2C or B to small b kind of a zone. The classic B2B, we have looked at some models in the past. And wherever we felt that there is an ecosystem advantage coming in, right? For example, some of these companies which are coming up like Perfios, these are ecosystem enablers. Because of a company like Perfios, a wide set of financial institutions, whether it is fintech, whether it is conventional FIs, are having a very unique advantage, right? It's like a toolkit for a very specific item for which you don't have to build things in-house. So that is the mind frame that we use for, the B2B evaluations.
Got it. Two people have mentioned Perfios. I don't know if there's anybody from Perfios here. I know they attend some of our events, but shout out to them. And then if I can further ask you, Shashwat, in terms of, obviously, banks are doing their best to get to the bottom of the pyramid in their own way, maybe slower, maybe structured differently, maybe more rigid. But what do you think some of your portfolio companies or companies you evaluate are doing differently or better or more efficiently? And how does that differentiate them, really?
Sure. So let me take a very interesting example, right? The classic dilemma is, for example, the banks wanting to reach farmers in a risk as well as cost-efficient kind of a manner. We have got a company called Argos, which is like a grain bank for farmers. The concept of grain bank is very simple. A farmer, when it's a harvesting season, the grains have the lowest price in the market. So if they sell instantaneously, they end up taking the price disadvantage. So Argos has developed a grain banking with around 200 odd grain banks across the country, where farmers can actually go and deposit even one gunny bag of grain, and they instantly get a grain bank receipt. And they get 70% advance money because the farmers during harvesting season require a lot of capital because they are employing so much labor, there is logistics cost, there are so many things that they have to take care of. In this scenario, and what ends up happening is we have a starting loan LTV of 70%, and when the grain value appreciates, 6-7 months down the line when the farmer is out in the market selling in the off season, consistently this company has demonstrated 50% uptick in income for the farmer. So our government keeps saying how to double farmers' income. This company has at least reached to that 1.5x level through this model. A bank partnered with us last year, and they, within the first year itself, they disbursed 100 crores with us. And it's a 100% secured facility because the grain is in custody of a company, and that company is also responsible for the market linkage of the farmer. So not a single default has ever happened. I mean, we are operating in a fintech environment where FinTechs face 25%, 30%, 35% check bounces. This company is giving you a classic PSL directly linked to the farmer with a 0%, 0% NPF. Forget about NPF, 0% bounce rate. So solutions like this exist, right? These are all, and it'll just be a matter of, being malleable, API-based kind of architectures coming in place to integrate with players like this. So it requires a lot of partnership mindset. So all the banks will have to have, I think before this there was a presentation where there was a mention of fintech lab of sorts, where you try to identify these, green shoot opportunities and try to collaborate with some of these partners who can be your operational partner on the ground. We have another company called Checkbook where Innoven is also there with us. And they have identified a very unique, cost-efficient way to cater to the shop segment. And they are offering lending, they are offering liabilities, they are offering insurance through a unified stack. And lots of banks and insurance companies have come in and partnered with them. And through them, the banks are able to build their books. The insurance companies are able to do general insurance, health insurance, life insurance sales to a customer profile, which invariably is not their core customer profile. They're completely building out this segment via such partnership. So I think the crux of the issue is how do you find the partners who can actually, who have fundamentals right, and then you integrate with them and build your businesses over and above them. They can be very good experimental grounds for you, and through them you can actually kind of catalyze an ecosystem which was never there to begin with. And banks, I think, have a very, very strong role to play because of the kind of wherewithal they bring to the table, the kind of tacit knowledge also they bring to the table. There is a lot that these partners will also learn from the banks. It's not just a one-way street. It is also the experience of the banking system from which these partners can also leverage. So if that collaboration starts, it can be a very beautiful collaboration.
So actually, that's one of my next questions is how do you measure this partnership, right? Because we talked to, Subit and I spoke to two banks last 2 weeks that said we have every fintech in India that comes and meets us and we will partner with everybody. And there are fintechs who value just having an advisor from the bank. There are fintechs who value having access to capital. There are fintechs that value having access to data. So what is the right metric for, and this is for the both of you, for this bank and fintech partnership? How do you weigh that? And apart from the softer aspects?
See, I think one of the challenges I've seen is that, the time to integrate many a times is the first level friction item which needs to be taken care of in one way or the other. Many a times what will happen is if the integration teams are extremely, they are pounded with a lot of requests from fintechs, that also creates a problem because they can never meet their deadline. And that creates that initial roadblock because of which the partnership is always starting on a very sticky wicket. So that needs to be addressed because I think it's better to first do a careful due diligence, select one or two partners for one or two go-to-market strategies rather than spreading yourself across 5-7 partners. It's better to spend that time early on rather than getting into a complete experimental zone. So as you rightly pointed out, the yardstick it will be that if you have taken a project integration of say a month or a month and a half, then you try to stick to it. That's the first part of it. And after that, there have to be very tangible kind of KRAs agreed on both sides of the table, which need to be reviewed and measured upon. And that will be a case-to-case dependent kind of a situation. How ready are the two parties? How keen are the two parties? And how much value addition is there on both the parties? So that's a bit of a subjective situation, but all of that should be charted out right up front.
Thank you.
I don't have much to add. I'll echo his points. And I think it's just about finding the balance of complementing each other and setting expectations. Because I think a lot of times there's a mismatch between what the fintech's expecting and what the bank's expecting.
Right.
And just seeing if they can figure out where. And there's also the regulatory aspect that needs to be addressed in this mix, which sometimes sort of falls in the gray, or one thinks the other can tackle it. And so just figuring that piece out.
Okay. I think in the previous comment, we spoke a little bit about MSME lending and how both fintechs and banks are trying to crack this layer, right? What do you think the answer is? What do you think the secret sauce is? What will differentiate the ones who win from the ones who don't? Is it about how wide their distribution is? Is it about the model under which they underwrite? Is it about the banks they partner with on the back end? If it's a fintech, what do you think is going to differentiate? Is it about the founder and the fact that they've come from a bank and so maybe they'll do better? What do you think the metrics there will be on MSME lending? Tarana, you can start, I guess.
I think it's a mix of everything, but the key thing would be is how you grow your book and the quality of your book.
Right.
I think it comes down to how you acquire your customers, what the quality of the book is, how you grow it, and what your NPAs are going to be at the end. It's simple. Founder quality, what background he or she comes from, tying up with a bank or not tying up with a bank, all those I think are just the catalyst outside of it. This is the main thing when it comes to lending to SMEs. The reason it's a tough segment to lend to is because underwriting it is tough. Yeah. And building that there's a certain segment of it that is credible and others are not. So how do you sort of expand, how do you grow that pie that you can underwrite the next level? Because a lot of times we think, if we can price that. But what we see is like you think you can price it, but that loss ratio goes up a lot more significantly. So I may think, okay, chalo, if I go after this next segment and I increase my yields by 5%, it will cover for the losses, but that's not true. So I think it comes down to key of underwriting and execution of it.
And is there a segment of that?
Sometimes I think our banks are smart. They know what they're doing. We can dismiss and say, they're not lending. There's a reason they're not lending to that segment.
So is there a segment, if you sit down with a company you're evaluating that is focused on MSME lending, is there a segment within that MSME that makes you nervous as an investor?
honestly, we're not the experts
Right.
over there, right?
Yeah.
We look at it as the quality of the book. Purely, okay, what are they executing? How have they taken into that consideration? So it's very hard to say that I know better than the founder does.
Right.
I can make a judgment call just based on generic quality of the book and say, okay, this makes sense or doesn't make sense. But just from all the sort of fintech lending businesses I've seen, or a little bit of the banks that we don't see but hear of and see their numbers in the public domain, we've recognized that there's a reason you say creditable and not creditable, and what that market is. Okay. And it's not easy to figure out what that, as I said, that loss ratio exponentially goes up without us realizing it.
Thank you.
Yeah, so my perspective is also very similar, that there are definitely, tenets of conservatism that fintechs can borrow from the banks. I have seen cases where, the fintechs have gone overboard and they think that only a proprietary algorithm is all it takes. And many a times for that segment, it's not the right approach. So wherever I've seen, value creation happening, I've seen the founders are open to maneuver their way to reach that optimal kind of workflow. And that workflow may not necessarily be completely in-house. It may require specialists for doing special things in that workflow, right? So you don't have to build everything or in-house. If you try to do that, that becomes very cost inefficient and time intensive. So I think that segment will require iteration. There is no easy answer. A lot of people have experimented different models. Unfortunately for us in India, or even regionally, there have been macro events which have come in, so that have shown a very different picture. These are, macro headwinds where nobody can preempt and prepare for it. So unfortunately, what could have been a simple scorecard, it's not that simple anymore, because when you have such macro shocks which keep happening again and again, and I manage Sri Lanka also for Avishkar, so you can sense how familiar I am with macro shocks. So this process is an iterative process. The algorithms will have to become smarter. There is no denying the fact. I think one of the vantage points which fintech should definitely maintain is that when they are doing that first level scrubbing of data, they should feel that they are at least somewhat intelligent about that customer. And after that, they have to read different signals to understand where are the melons, where are the oranges, and take their bets in a very calibrated kind of a manner. And it will require iterative process. It will require profiling, reprofiling again and again to reach a place where you feel comfortable that you are a prudent lender. That's my view.
So I know Tarana is focused on India, but her group does have non-India funds, including Southeast Asia focused funds, and they have a dedicated China fund, I believe. And obviously, you have involvement in non-India funds as well. What about, there's a lot of talk nowadays about fintech in other parts of Southeast Asia, what's happening in Vietnam, what's maybe happening in Sri Lanka. And that's the big story for the Western world. India is a part of it, but now it's other parts of Southeast Asia, right? So what do you think? And I guess, Tarana, you can talk from a non-India perspective in terms of maybe the US because you spend time there, or any other geography that you can relate to. What makes, apart from the, well, I guess the population and the macro, and that plays a big role, but what else makes India unique when it comes to fintech? And the way these businesses are growing or being founded or surviving. What makes India unique?
I think, just UPI alone makes us unique, right? We're way ahead of anyone in terms of how peer-to-peer payments are done, and what NPCI is doing, and I think ONDC is doing. So I think that alone puts us on the map. I think we're way ahead of the West, and even, parts of Asia actually trying to catch up with us, but as you pointed out rightly, the markets are small relatively. So I think population, as you pointed out, just the tech development that's happening, is a huge, I mean, just the government, I would say, over here, even though I'm not a big fan, the government push has been commendable and puts us in an advantage. Also, just from an innovation perspective of what I'm seeing with some fintechs, some very early days, but if they are able to execute, I think would sort of also give us a huge advantage on, and the awareness just generally with the population and what's happening in terms of aspirations, savings, awareness to sort of investing and insurance and those aspects.
Yeah, so obviously, as Tarana mentioned, public infrastructure is of a very different level in India. And second is talent. I mean, we are way ahead. If you compare Southeast Asia and India, so I've worked extensively in Indonesia as well. Indonesia has around 25 crore people. So one sizable population outside India. And that's where a lot of capital also outside India has been directed. China obviously is at a different level. So I'm not bringing China in the equation. But if you compare ex-China opportunities, Indonesia is the second largest, but where Indonesia is, I mean, in terms of opportunities, Indonesia has wide set of opportunities because their startup revolution only started about 5-7 years after India. So in terms of value creation, where you'll see a lot of unicorns emerging in the future, you will see Indonesia being right up there on the map. What is not so great over there is the level of talent availability, especially on tech side, and hence most of the later stage funded companies have Bangalore as their dev centers. So there is a clear realization that you require a certain quality of talent which is not readily available in those ecosystems, and hence many of those well-funded companies have brought in their dev centers either in a Bangalore or a Gurgaon. So we have a very unique advantage. India is a tough market to make money. Indonesia is easier to make money. Profitable companies emerge faster. Their bank NIMs are close to 8%. So as you can understand, making money is not that hard over there. Their ROCE of banks is at 35-36%. So from that angle, you know, a fintech coming, disrupting, and creating value for themselves as well as for ecosystem, there are unique opportunities available out there. And a lot of Indian talent is actually utilizing it. Most of the founders you'll find there are from Indian origin. But India will continue to be like the leader of the pack. Something comes up in India, within 6 months something comes up in Indonesia. So you can pretty much draw the parallels. And there will be an Indian guy in Jakarta starting something. So we have played that role in that ecosystem.
Thank you. Can we talk, Shashwat and Tarana, a little bit about what's happening today, right? In terms of the slowdown, in terms of the slowdown in fintech investments specifically, should we be comfortable assuming that it's just a cycle and it's just a correction? Should founders be worried and demotivated? I guess people like Tarana can keep busy in any case, right? Because the way you look at these businesses is a little different. And so do you have more people showing up at your door? I guess that's another question. How would you kind of define this phase? And what do you think is going to happen? I know everybody's guessing, but what do you think is going to happen?
So the short answer to your question is yes, there's a lot more folks opening to venture debt. But coming to, I actually think the slowdown was needed.
Yeah.
We had a lot of froth in the market. Valuations were out of whack. I know founders don't want to hear that, but the way I think if I was a founder, I'd look at it as, yeah, maybe I won't get the high valuation, but also if I believe I'm a good founder, I will actually get funded. So I think it sort of helps with the cleansing in the market where actually the right business models and founders will get funded versus anyone and everyone getting funded. So where we look at things more closely, I mean, I'm sure Shashwat will speak, you actually have time to evaluate the business, you actually have time to do your diligence, governance, figure things out, is this model make sense versus, being in a situation where it's like, I have a term
2
sheet,
days,
you have 2
1
days,
day.
give me another term sheet or we're done. And it was just good money going after bad. So I believe that it's a good phase. It gives everyone time to sort of breathe and figure out what they're doing. Even and for founders, right? I know so many founders who felt they were just on a treadmill trying to get growth versus now they can actually build their business the right way. So I mean, yeah, ideally not wanting to be such a drought, but as I said, it's not a bad thing. I was optimistic 6 months ago that this would be a 6-month sort of slowdown. But given what we're seeing in the environment globally, I would say maybe another year where it will take things to settle down, and I'm sure, and then things to pick up again. Now we can all be wrong and it's just a guess, but I'd say another year to sort of go back to, sort of a upward trend.
Yeah, I think I echo your thoughts. For us as investors also, you love the cycles or you hate the cycles depending on where you are in your journey. So given that I have a new fund and I'm deploying now, it's a good time for me. So can't complain much about that. But obviously, portfolio is in that mixed kind of a mindset of what do you do. I mean, what is the gloom cycle that you can actually hope for? But I think a lot of corrections were required. There were a lot of excesses in the system. There were a lot of inherent assumptions that money will always be there, kind of thing, and that needed some degree of correction. It's not been easy, especially for people involved in the startup ecosystem. Unfortunately, that leads to cuts, and that creates a very difficult kind of environment, especially when you are trying to hold your team and grow. So the mental turmoil, apart from the valuation impact, the mental turmoil that it causes on the teams is also something that is very tough on the ecosystem right now. So we as investors, we are trying to hold it together and see how best we can maneuver this without really taking too many hard calls. If it's definitely not necessary, should we even go down that route? But hopefully, as Tarana mentioned, 6 months, 12 months, there is enough dry powder in the ecosystem. So and we are timed funds, so it's not an indefinite fund that we can just keep sitting on the money. So hopefully that force will kick in at the right time, and deals will start happening. Deals are already happening now also. It's just that it's taking a little more time. The check sizes have come down. The valuations have come down.
Okay, great. We're almost done. Just quick 2, 3, 4 word reactions to BNPL. One sentence, whatever your current point of view is. Tough. Shashwat?
Yeah, I mean, it's tough. There is no denying that fact. The book quality speaks for itself. So, I mean, we think that the world is partially online, partially offline in any case. Our world is a little hybrid to begin with. So we haven't really taken BNPL bets. But I think over time, people will realize that there is a role that the offline world plays and online world plays, and many online-only businesses have also gone in the omni-channel kind of a direction. So maybe it will lead to business models which are probably slightly slow-paced, but more prudent. But that is going to require the iteration that ecosystem is heading towards.
And lastly, AI and ChatGPT.
I think there's a huge opportunity.
Huge opportunity.
Yeah. Evolving.
Yeah, significant opportunity, right? I mean, that is one of the biggest macro trend which is coming to the fore. And I think as with any optimization, I mean, when Google came, the level of activity on web went to a different level altogether. Similarly, if something like a ChatGPT comes to comes in its full form and shape, many of the intelligentsia behind the businesses will definitely go to a different level. So big disruption, and we are hoping that everything, everyone is able to leverage it optimally and make their business models very, very efficient by virtue of that.
Okay, thank you both. I had a few more questions, but I think we're out of time. Thank you both for your presence.
Thank you, Sahil. Shashwat and Tarana. That was a very insightful session. We'll now move quickly to our next session, and for that, may I please invite Chetan Parekh to take the stage and continue with the fireside chat.
So we're here for fireside chat on the future of digital banking. May I invite Ramachandran Tavamitu? Please welcome him. So Ram, as he's called, is head of digital banking at Tagit. So Ram has 15 years of experience in the industry across some of the bigger brands, HCL, Temenos, and then he finally ventured into Tagit, which is a fintech. We spoke about a fintech a lot. So Ram, very, very warm welcome, and thank you so much being with us. So just a quick introduction to Tagit. Tagit is a very interesting digital platform company. They have a platform called Mobix. And Mobix, as it's called, Mobile Application Development Platform, is one of the innovators, and they are very, very well funded by a couple of large private equity as well as Singapore government. So Singapore government even gave them early capital and being part of the journey. Ram, digital banking, and you guys very much started it a few years back in this part of the world, Southeast Asia. So if you can just tell us, when it comes to digital banking and Mobix, what does your product do?
Yeah. First of all, thanks for having me here, Chetan, and good afternoon all. So to give a little bit about our portfolio, we are a fintech-based product innovators, innovating the digital banking solutions from retail, corporate, onboarding solutions, and having a development centers across India, Philippines, and Singapore. I think to give a little bit summary about our portfolio, our products handling 100 billion plus annual transactions with 250 million active users as of today when we are speaking. So we own our proprietary platform called Mobix, which is a business agnostic platform. By using the platform, we provide the product suites for retail banking and corporate banking and onboarding solutions, which enables the out-of-box implementation for the bankers who wanted to go to market very quickly. So that's where we play stronger in our portfolio.
Very, very interesting. So when you look at the digital banking and traditional channels, right, people are used to being in branches or do internet banking. How do you see this changing for branches and agency because of some of the innovation you're bringing?
Yeah, that's a very interesting question. While the digital banking transformation is just, growing a lot, especially in India and across the world, while thanking to COVID for this transformation across the world, but I would say that, the transformation started from the demonetization which happened in India. That's where people started to think very differently about holding a currency in hand versus, using it in a digital way, right? Definitely not a positive thought for black money holders, but for a general crowd of people, how they use the bank, branches, or a digital currency, how they utilize, it starts from there. So using the branches, it's a very interesting touch because the branches are played a stronger role in the industry when it comes to banking. Coming from the background of, if you go a little history for the past, 50 plus year experience, anybody wants to do any transaction or anything from a banking perspective, it starts from a branch, correct? You start from creating an account or doing a fund transfer or taking a money, anything and everything starts from branch. But now, when digital enter into the space, the the play is becoming different now. I can give you a few examples of how this transformation is happening and how it connects to the branches. Take QR code as an example. Yeah? 10 years before, the QR code was a nifty puzzle for the larger crowd, not for the tech savvies. But today, if you see, QR code is as common for everybody. Everybody knows that the QR code handles their account details and just that, right? That's how the transformation starts. And you take check as another example. 10 years before, I remember still my father was asking me, hey, look at my signature is equal, right? Because it will get pounded back if it is not correct. But today, if you see, the check leaves are just used for a cancellation to ensure the account number is correct, right? The purpose is getting changed totally. In the same way, what I am seeing is the purpose of the branches will get changed eventually. Not drastically, it's not going to be an overnight or within a year change, but eventually it will start to get changed. When I say the purpose, earlier when it was used for account opening or onboarding the user or any fund transfer or taking the money or holding the payments, everything was happening in the branch level. Going forward, what will happen is the branches will get shrink with the tight focus of, maybe the locker services where we don't have a solution today, right? The locker services, definitely the users has to go to the bank. There's no other way, right? And for submitting some of the documents with the by-person signature or addressing the grievances, or the larger crowd would require a personal way of, seeing the interaction with the banker to raise a confidence, right? So these are the very purposeful shrinking will happen at the branch level. That's how I see with the onboarding of, digital experiences today.
Very interesting. So when you look at, again, some of the journeys you've done out of Singapore, Indonesia, and then India, and you have been one of the largest player with some of pretty large banks.
Yeah.
So if you compare, is it digital channels similar across markets, or are these markets having a very different need? If you have to take a couple of use cases and compare.
It's a very interesting point. So while the digital banking is wider across the world, the experiences would require different ways. And don't go beyond India. Even within India, we require a different kind of experiences with a different kind of segments of people, right? Even within India, we can just easily classify a tier 1, tier 2, tier 3, tier 4 customers where we have to provide the different kind of experience for them. While I always, believe that the engagement may be different, but the experience has to be same. And I can just go back to the same experience of QR code, right? You take QR code, the engagement would be different. When I say engagement would be different, there is a lot of awareness need to be created across the population, right? Then once the awareness is created, once that engagement is successful, then experience is same. So using the QR code, experience starts from CIOs, CXOs, until the street vendors, it's same across the world, right? So when it comes to that kind of segmentation, even within India, there is a good amount of population which requires understanding of the systems, correct? So in that perspective, we require a different kind of apps, which can be done only with a combination of FinTechs and the bankers on what kind of experience they wanted to provide. Say an example, the farmers or agriculture segments would require a very light app, right? They doesn't require a huge super app, which involves investments, mutual funds, etc. Then, if they require just to understand what is their balance, right, or how they can apply for a lending easily through the app. For an example, you take Axis Bank. They brought the Bharat Bank as a good innovation, which acts exactly focusing on the farmers and agriculture industry. which enables the difference in the kind of engagement to deal with the different kind of people. So that's where the starting of the difference comes in place.
So with these many different apps and channels, there are so much data getting generated. And Felipe spoke earlier in the day about bank needs to find a way to analyze this data and make it meaningful customer insights and then use it to create value propositions. So when you are doing the real life projects and you and your team are helping some of the large banks like Axis Bank and all with these kind of innovations, how or what is the advice you have for banks? How should they do their data analytics and customer insights program?
Yeah, the data is very important. I think in our previous sessions also, people were talking about the data, the importance of the data. Today, with the digital steps into the industry, the data is wider. You can capture any data, right? Every data. But it's all about how are we going to use the data. That's where the analytics comes in place. Today, in a typical banking, what happens is the digital capture all the information. Then the banks have their own MIS team to collect certain type of rules and then ask the MIS team to drive out the information of, okay, what is the output for rule number 1, for an example? How do you identify the customers using more foreign currencies and foreign transaction who's traveling a lot? Or how the customers is spending money through the vacation, for an example, when May comes, India, just not only India, across the world, they just go towards the vacation or even December comes. So that's where the analytical starts. And the user journey is also, involved in there. Like, how frequent the user is clicking to certain investment page so that, the customer segmentation can be, broken down by using the data, and then the personalized product suggestions can be given. And more, this would help the bank to go to the next level. You may find it crazy, but this is how the bank is going to evolve, where today, when the bank is suggesting the vehicle loans or home loans, tomorrow you will be wondering, banks would be suggesting the vehicle itself and the homes itself, right? That's where the banking is going to evolve a lot from intrusion of the digital banking.
So when you look at it from a product company's perspective, right, that you have to personalize the customer's experience. And there are so many eventualities and opportunities. How does a product company prioritize what do you build? And whatever you build, how do most optimum way to take it to your customers as a banks?
Very interesting point. If you take our products, for an instance to compare, our products are a microservices architecture product, which is scalable on demand and expandable and extensible, which is very important. Because when we are a global providers, but strong presence in India with Axis Bank, Citi, and implementation is going on with the Saraswat, the requirements coming differently, especially to connect the very good example, the RBI guidelines, right, today. The RBI guidelines or the government guidelines would change from industry to industry and country to country. That means, as a FinTech product innovators, our product has to be extensible, easily to adapt the guidelines. Because when the RBI change the guideline, our product should be able to implement the guideline quickly. So that's where the extension comes in place. This is where we are successful with our banker partners.
Interesting. And when you look at one or two technology advancements in near future, which you believe will hugely change the way digital banking is embarked in India, again looking at Southeast Asia and some of the other experiences of yours, what would they be?
I think I'm very happy to connect the dot with the UPI. That's how the India is growing from a digital banking platform. I think 5 years back, except the tech-savvy group, nobody would believe that UPI is going to hit that kind of mark today, right? And when UPI is going into that kind of layer, that ensures and encourages the FinTechs that the technology evolution is going to be very stronger in India market. While Aadhaar is connected to all the systems, UPI is holding a great responsibility in the market. And interestingly, this is where the customer engagement is also coming. While UPI has become successful in a factor, now you see the next step of UPI is coming with a lighter app of anything just go below 200 transaction. It's a straightforward transaction, right? That's where the UPI Lite is coming in place. So this is how the technology innovation is going to be evolved more, especially you take the chat systems today. In a customer apps, you wanted to chat with the banker, the AI is handling. Today the AI is not so good from a current standpoint, right? You click 1 for something, 2 for something, 3 for something. But the evaluation happen in the AI perspective today, it's going to be very intuitive conversation, right? Even with human or without human, the system should be able to handle the banking needs and the queries. For an example, through the conversational banking, which is going to be getting more stronger, where the chat AI is proven very strongly today in the market. At the same time, the data analytics that we are doing from a MAS or operations perspective, which will be handled by AI strongly. So that's how I see the technology innovation is going to happen. Again, this can be grow in a very stronger and more intuitive way by having a bankers and fintechs sit together and then innovate the solutions.
So very much you're saying, one, peer-to-peer and the products around it. Second, conversational, voice banking, supported by ChatGPT kind of innovations is what's going. Now, given that it's such a huge growth, which you saw earlier in my presentation, and multiple channels growing at a faster speed, there of course has to be challenges, right? Which banks have to be prepared for. So what do you see as a couple of challenges while implementing product like yours, which banks have to go through, and how can people prepare for it?
Okay, so first of all, bank has to decide about what kind of infrastructure they want and how it has to be scaled. It doesn't require that everybody follows code, everybody has to follow code, right? Or if in a traditional way, if you're sticking to on-premise, should we stick to on-premise going forward? It is not required. So the value proposition comes in place where the right evaluation happen at the level of infrastructure and the level of UX investments they want to play, and the level of segmentation of products that they want to invest. For an example, like I said, the light app versus the super app experience, right? So that's where the bank has to be more clear about where they want to invest and how they want to grow from a technological aspects. That is what would define the stronger growth. Like you said, the 71% of the growth which we are expecting within 2025 on the digital banking transactions, that means bank has to ready for that investment. Because I do understand the investments on the technology side is lesser in India, which is growing for sure, but it has to go furthermore from a stronger technology aspects.
So that's a very, very interesting perspective, because earlier in the day, I heard one of the senior banker telling me that the bank, which is a tier 1 bank, has decided that they'll call themselves a technology company. They also do banking. So I'm glad that your thought process echoes the same spirit. So I think we are running out of time now, but thank you so much, Ram, for very, very interesting insights, and wish you all the best in your product journeys to bring further more product innovations for the banking community. Yeah, thanks, sir.
Thank you so much.
Thank you, Ram. May I now please invite Nikhil Gokhale to conduct a quick fireside chat with one of our panelists. Nikhil, please take the stage.
I'm going to say thank you, Ojas, and going to quickly jump there. This session is Ask the Experts, right? And what are we going to ask the experts? Of course, we're going to ask the experts, how is digital banking helping the banking for the unbanked, right? We have Siddharth Sanyal. He is the senior economist with Bandhan Bank with more than 20 years of experience in economic research across various domains. He has previously worked with Reserve Bank of India, also with Edelweiss Capital and Barclays. We have previously had speakers from RBI and Barclays here as well. He's been rated as a top economist in India, and he's joining us virtually today. And in a minute, I will be standing or sitting right next to him. Siddharth has deep understanding of the underbanked and unbanked segments, which is, in other words, the bottom of the pyramid. And I think that's where the economic growth of India is going to come from. So, without further ado, let me jump straight to the chair.
Hi, Nikhil. Am I audible?
You are audible. Just to give you a sense, you have an audience of about 70 to 80 people here, waiting eagerly to hear what you're saying. And let me jump straight through with my first question.
Yeah.
Siddharth, first and foremost, why? Why does India have such a large unbanked population?
But before we start, my sincere apologies for not being there in person. I was keen to be there along with you all guys. Somehow not in town today, so couldn't make it in person. But at least we could connect virtually, and that possibly sets the tone in a way, right? That in case of some eventuality, and COVID possibly has taught that to us in a much more apt and befitting and emphatic way, that you can actually add, stack up on the brick and mortar efforts through our digital route. But without much ado, I would like to say that I'll possibly give one or two examples from what we get to see in my current job as a chief economist and a member of the core management team of Bandhan Bank, which is actually leading or a very significant player so far as financial inclusion is concerned. So basically, what we get to see that still we have a large number of pockets, especially in certain parts of the country, not necessarily everywhere, where there is still, if I try to take brick and mortar activity, the cost is very, very high. Now, we all know that. Now, the key question is how we can bypass that, or how some of the banks which has actually progressed, how it is doing that. For example, I can again come back to my bank's example. And this has been a bank for the last about 8 years. And prior to that, it was in another avatar within the BFSI space. But what we have seen in the last 8 years, instead of going for a large-scale, full-fledged bank branch, we innovated some kind of a light touch. I shouldn't say light touch, but limited offering, no-frill bank account, bank branch, which we call banking unit, in deep interior rural areas where at a manageable cost, we could deliver all the services. To what extent we could deliver services, we often internally quote one particular number. And when the first time it was told to me, it was really, really mind-boggling. Say, for about the 30,000 or 25 to 30,000 field force that we have, how much distance, to what extent they actually reach out to people in the unbanked areas? On an average, if they travel, each of them on an average, if they travel something like 12 kilometers a day, which they easily do. They possibly do a lot more. We very proudly flag one particular statistics in some of our publications, annual reports, etc. The total distance my field force covers every day is something close to 4 lakh kilometers a day, which is slightly more than the distance of moon from Earth, right? So that's the distance they cover. So we had been setting up a banking unit, which is a no-frill or low-cost bank branch, you can say. On top of that, from that particular point, my people had been traveling this distance each and every day, day in and day out. But till about 5 years back, we had to rely only on these two channels. Gradually, over the last 5 years, what has changed on top of this, we are adding very significantly on our digital efforts so that the penetration and reach can be even better.
Interesting. I think the next step for Bandhan Bank is to have a branch on the moon. But jokes apart, I think a few segments within, right? You mentioned that how you are now reaching the underbanked to not just the physical means but also digital means within the different segments. For example, in the rural areas, the women folk, right? Those are the segments which maybe even lack the financial literacy even more, right? So, what can be done to actually support financial literacy for the underbanked? And then a very related question now, because we're talking of financial literacy and also the technological literacy hand in hand because of the digital channels. So what can be done to improve both these areas and maybe for specific segments which typically lack the opportunity to do these?
Let me try to explain. Thanks for this particular question. It's a very, very pertinent one. Just to give you a sense, Bandhan Bank is a pan-India universal bank. It has many different lines of businesses, verticals, etc. But we still have roughly about half of our asset book in the microfinance business. Say at the start of the journey 8 years back, it was 100% in microfinance. We are diversifying. We are going into different areas where the other businesses like housing, MSME, some of the other areas are expanding very significantly. But still, just to set the context, we still have roughly half of our book in microfinance. Now, predominantly, these customers are women customers. So here we are talking about something like more than 1 crore active customers who are women. So we are into a situation or a drive or a mission where actually this financial inclusion we are taking deep inside not only the rural areas, but in case of a household, almost to the kitchen. Now, what is very important for us and what we found that it was very important for us to ensure, given the socioeconomic backdrop, at times we have seen that the husband of the family or some of the grown-up kids, they often have a significant say so far as some of these activities is concerned. Our attempt had always been to ensure that we are fine if they get involved in a constructive way, but at the same time, I want to ensure that my customer, who is my primarily the person with whom the bank is in touch, we want to ensure that she is absolutely capable of handling everything on her own. So two things we wanted to do. We wanted to go for a very well-assisted digital literacy program. So the person, the 30-odd thousand person that we are talking about, the number today is actually much higher than that. But the persons who are actually facing the lady there, at the doorstep of her house, is teaching her keeping the teaching module very, very simple. Don't teach too many things. Just teach 2 or 3 things at the maximum, which can actually allow her to deposit money, withdraw money, see her statement, something like that. And that has worked beautifully for us, number 1. Number 2, in case of a doubt, we try to ensure that there is one physical brick and mortar branch or a very light branch somewhere within the vicinity, which she can aspire to reach out to, or can in reality reach out to if there is a need. So that has also worked beautifully. I'm talking about a time 7-8 years back or 5 years back, when we used to have something like a handhold machine, like a credit card POS machine that we typically see in very many merchant outlets. My people used to, walk around in the rural areas with that, and the slips, etc., were generated. Today, actually, these people walk around with a tab, and everything like a tab banking that you get to see in the drawing rooms of Mumbai or Delhi. This we have actually taken to the deep interior rural India also. Many other banks are also doing it. For us, the difference is the scale. And for us, the approach has been an assisted model for the lady. And typically, we just try to focus on 2 or 3 things and try very seriously not to go beyond that, so as to she doesn't get confused. And that has worked beautifully for us.
Beautifully said, Siddharth. You actually echo a thought that was shared earlier in the morning. I know there's some feedback here, but we had a thought earlier in the morning where Felipe who joined us from UK from Revolut, he actually said the same thing, keeping it simple. So I think it's a secret mantra that maybe the audience is going to take back from the current conversation. I have 2 more questions, and then then we can have a quick check if there is any audience question. But look, we've been speaking about the digital channels from the customer point of view, the ease for the customers. Let's talk about it from the bank's point of view, right? Typically, these, when we're talking about the bottom of the pyramid, we're talking about, unsecured loans. We are talking of people with maybe do not have enough documentation. So from a risk point of view, how does that impact a bank?
No, I think their digital and physical doesn't make too much of a difference. I think the key thing here is for my credit evaluation department or underwriting department, how well they know the customer. And this is not the KYC that we talk about in terms of documentation. We know that we are dealing in this particular vertical of ours, we are dealing with a segment where she doesn't have enough documents, papers, bank passbook, etc. But it's not that something by accident. That has been the focus, that has been the mission, that has been the objective, that's the goal. So we just try to equip ourselves better and better towards that objective. So I don't think any challenge whatsoever there. So the strength of this particular vertical of mine is actually knowing the customer's business inside out very well in advance. So this has been the strength of this particular unit for many, many years, for about a couple of decades, and even after it turned into a bank. On top of that, what we have done that over the course of the last few years, we have enhanced it further with better data analytics efforts. So we now have a very strong, vibrant data analytics team. For these people also, we do take recourse to various bureau data, various internal transaction data, and we do sit on almost a gold mine of data where we have something like today, the active customer in this particular segment is more than 1 crore, and some of them have history for the last 20 years, and all the data is there in the system. So we do run very rich, very detailed, very rigorous analytics exercises, and that gives us a much better focused approach in terms of selection, in terms of early warning, etc., if any, which is the new addition over the course of the last 3-4 years, I would tend to say. So I don't see too much of a challenge because it's unsecured. because I mean the mission is to help them hold their hands in their journey to become a move eventually from an informal to formal sector.
Thanks. Appreciate that point about not having that big a difference when it comes to the KYC and So my final question, Siddharth, is what kind of government initiatives are there that is supporting the digital banking for the unbanked? How is that helping? Have you seen anything that is already working, and what more would you like to see?
That's a very pertinent question too. My sense is that the broad focus or overall focus, a very serious focus in terms of taking digital initiatives, including digital banking, to the next level, is commendable. It's actually not an option for the system. It has to move in that particular direction. Some of the units like us are fortunate to have a very rigorous and strong field force network, etc. But in today's world, it will be foolish to rely completely on that, or if we don't try to equip them with additional weapons like better digital experiences for customer or better analytical rigor at our end. So we do focus on that. From the government's point of view, the regulations are generally, we find that the regulations to be quite pro-digital activities, which is very encouraging. Generally, the physical network is expanding at a rapid pace. I think overall, there has been a very significant progress on some of the areas like rural electrification over the course of the last decade or so, which is also a very favorable thing for overall physical infrastructure to function more seamlessly. The benefits and mindset change we are witnessing now. I think one last factor which remains very important, and it's heartening to see that central banks, RBI, government all do talk about that. How exactly you enhance awareness on the part of customers, especially at the bottom of the pyramid? How exactly you enhance the risk mitigation processes then? For example, I'd possibly say that financial literacy plus digital financial literacy is such an important factor today. My sense is that at some point of time, we need to think that whether this can actually qualify as a CSR activity for various firms, including the BFSI organizations. You can possibly have a lot better focus drive there and actually benefit the entire ecosystem through these efforts, which we don't get to see in that scale today. So some of these initiatives need to come, but the focus is clearly from central bank, regulator, government, and which is really heartening to see.
Very interesting. Even as you were speaking, Siddharth, I think one image that flashed in my mind was Amitabh Bachchan actually saying, RBI kehta hai satark raho. So it is a great way to actually talk about, the digital financial literacy that the government initiatives are doing. With that, Siddharth, I think we are completely, off the time that we have for this particular session. Really appreciate the time that you've taken to join us virtually. I cannot give you the memento that we had planned, but I promise you that once you're back in Mumbai, we will meet up and I can give that to you. Right now, I will leave you with the thunderous applause from the audience.
Very much.
Thank you so much.
And once more, my apologies for not being there in person.
Thank you so much.
We have some interesting sessions with some interesting panelists, and without further ado, let me begin our next panel and calling our moderator, senior partner V. Ram Kumar, as he likes to be called. Sir, can you please take the stage?
Thank you. Thank you, Ojas. Good afternoon. As they say, this is the test of a real moderator is to run the panel after the lunch session, right? So here I am. Thank you all for being with us, and we have some very interesting panelists today. So why don't I quickly introduce the panel, and then we'll jump into the discussion. My first panelist today is a career banker. He's worked with many global banks, HSBC, GE, First Rand Bank, and now is the country head for Doha Bank, India. Please welcome Manish Mathur on stage. Manish. Welcome, Manish. My second panelist today, we have a banker, so maybe we should talk about a technologist who has actually worn multiple hats. As a technologist, he's worked with in the core banking space with firms like Infosys, in the payment space with firms like FSS, and now actually he's an SVP and heads product innovation at Kia.ai. Manoj Chopra. Welcome. So we had a banker and we have a technologist. It's time to also have someone who's actually a techno banker, someone who's actually worked with multiple organizations, including i2, Credit Suisse, Samsung, was earlier the founder of, he's been a founder of 2 interesting FinTechs. Presently the founder and CEO for Bharat Next, which is a B2B payments on credit cards. FinTech, Akshat Birla. Thank you, gentlemen. The discussion today is actually on instant payments, quote unquote, the flag bearer of digital banking. And we saw some very interesting conversations this morning. Irrespective of what the topic of the discussion was, it eventually gravitated and steered towards payments. And then we are now talking about more specifically on instant payments. So I'll probably start with you, Akshat. I think, if you could actually help define the concept of instant payments. And since you actually are an innovator at heart, if you can talk about what's the continued innovation and success that we have been experiencing as a country in this space.
No, absolutely. I mean, this is a very big question, but I think, to answer that question, we'll have to go all the way back to 300 BC when we had coins invented, right? Coins was the most primitive form of instant payments. You traded goods, you gave coins, and voila, instant payments are formed, right? And as we graduated toward more convenience and towards more inclusiveness, we started moving away slowly from instant payments. So we go back 17th century when notes were invented. Then once notes were there, then we came into checks. And checks, of course, they gave a lot of convenience, ability to pay later, but also brought in the whole concept of delayed payments as well, right? And then go down the route where, first credit cards are issued. 19th, almost like 20th century is when digital payments started to sort of take shape, right? But it was not until the 21st century that we saw semblance of instant payments come in. So IMPS was born in 2010. Basically, the CTS systems came in 2011. And all of these things started to happen, right? So this was basically where we started to see that, okay, payments can be instant again, and it is not cash which is instant, right? And to give you some context, how many of you here have cash in your wallets? Just raise hands. Congratulations, you have a 17th century artifact in your wallet. I mean, this is how far back cash is going, and it's still not disrupted with, yes, we have achieved a lot, right? I mean, if I go into sort of where we are at now, so, just contextualizing where we are at. We do about 50 million checks a month, 100 million PPI transactions, 220 million debit card, 230 million credit cards, 400 million wallet transactions, or 500 almost, right? And which is wallet was the first time that we started to see real instant payments at a merchant level as well. Right? I mean, the driver of a lot of the payments was at the merchant level, and that's when we started to see that happen, right? And we all know what demonetization and essentially UPI has done to that. Right from 2016 going on to almost about 2021, we are already at 10x of wallet transactions, And even as we speak now, all the other transactions together is about 1 billion transactions in a month. UPI is close to 9 billion transactions in a month. And UPI is the one which has really sort of helped us transform where we are at from a digital payments perspective. And then we can talk more about what the implications are, but we all know what's happened, right? I mean, right from, it took about 70 years to, for us to get to almost about 75 million POS terminals. It took us 7 years to get to 250 million QR codes. That's a staggering number to sort of look at what digital has done. And a lot of it is through instant payments, right? I mean, the instant payment aspect, and of course, the fee-less nature of UPI is really what has driven this growth for us.
Fee-less?
There's no fees.
No fees, fee-less, okay.
So POS
it's
system,
both
credit cards,
cashless,
debit cards, everything, there is a charge.
both cashless and fee-less is where we are moving towards.
Cashless, yes, of course. But what has driven cashless is the fee-less.
Is the
economy,
fee-less.
right? But I mean, the bankers here will definitely not be happy with that, because I saw some stat that about the banks and all the ecosystem combined together is burning about 1,200 crores a month to support the transactions.
Yeah.
And just to tell you, I mean, how difficult instant payments are, right? I mean, so there are 4-party system in a UPI, right? And there are about 10 API calls that happen on a single UPI transaction, be it 1 rupee, be it 1 lakh. Now, multiply that by 9 billion transactions a month. That's 90 billion API calls, right? For the technologists out there would really appreciate what the scale of this thing is, which is 3 billion API calls a day. And that's a free infrastructure that we have created, right? To enable instant payments, really. Right? I mean, and it's riding on the NPCI's IMPS
platform. Yeah.
But I mean, just a flavor of what instant payment entails, right? And with instant payment, what can we achieve? So cash is, of course, the most primitive form of instant payments. Where we're heading is a very exciting space.
Fascinating. No, I agree. I mean, I think it's one thing to say fee-less and moving away from less fees, but I guess considering that such an investment has been made, and I will take this question to you, Manish. It's one thing to say that we actually are having these staggering numbers of transactions, driven by digital payments, right? But that's actually from a technologist view, right? I mean, as someone who's actually engaging as a banker, both with consumers and businesses, how would you see the impact that this is creating for the segment that is enjoying the benefits of it, which is ultimately the customers, be it institutions or individuals or the economy as a whole? How would you actually take a look at that?
Right. Thanks. So I think I will obviously distinguish when we talk about digital payments, I would like to distinguish cash from digital payments. I think we are talking about, I think I'll probably look at it from a perspective of all digital payments which are not non-cash, I mean, or not an instant payment, or cash is not an instant payment. So I think the key benefit, obviously, from a customer's perspective is that, there is flexibility and convenience in terms of making the payments. You can probably manage your funds better, both from investment and cost perspective. But I think more importantly, I would feel that, the fact that there is an audit trail that gets created every time you do a transaction. So, to actually support any subsequent claims, it becomes much easier with the digital payments that we have now put in place, which was probably missing earlier. The other thing, obviously, from an Indian economy perspective, has also been that, it has also triggered, financial inclusion and, better transmission of government policies to citizens. Because obviously, we did open the Aadhaar, we did open the accounts, the Aadhaar accounts and all of that. But I think the fact that digital payments came along and became a necessity from a business perspective, as well as to receive the benefits that the government wanted to give, I think that is really what has triggered the interest of the customers to really, utilize the benefit of, the Aadhaar accounts that were opened and all of that. So I think those are the few, key benefits, I think. The other benefit I feel, obviously, it's an evolving situation right now. But obviously, some of the instant payments also give you an authentication of the beneficiary, which also, I think, was always a little bit of a concern originally. You were paying out the cash, in a lot of circumstances when you were not sure, who's the actual recipient, whether it's the right person you should be paying this money to or whatever. So that I think is also obviated to a certain extent. And the last is obviously, not having to carry the cash. I mean, I think you don't run into that security issue. Obviously, with instant payments, there are different type of security issues that we need to look at. But, just the concern that people would have, in case they had to do a large value transaction to carry the cash, get it transmitted, all that is sort of avoided, as far as customers.
Fascinating. So you see this impact both from a transparency standpoint. It creates financial inclusion, so it's a larger economy that's participating. It avoids the parallel economy, so it creates a audit trail driven, is what's actually non-repudiation is an area of benefit. But at the heart of all of this, and I'm taking this question to you there, Manoj, and you've been an innovation guy, right? I think we had Akshat talk a lot about how the journey has been from many centuries. So now we are actually at now, the power of now at instant, as we call it. So if you had to pick something as the hallmark of this innovation, and how digital payments has demonstrated that, how would you actually articulate your views on those?
Yeah, so I think there have been several hallmarks of innovation that have kind of transpired to make instant payments successful. So if you look at over the last couple of years, there have been multiple payment instruments, payment methods. There have been various form factors, and there has been a lot of innovation around that. But if I have to just look at one of the most significant and most overarching innovations that have impacted the lives of people, I think is the digital payments infrastructure that has been set up by the government. I think if you look at it, everything that we are doing today is riding on the rails that have been provided by this infrastructure. So you call maybe it Aadhaar or it eKYC or most recently now the account aggregator framework. All of that I think has been very, very significant. If you look at Aadhaar, for example, which is the unique identity that all of us have, and that has really helped in creating a number of Jan Dhan accounts, which is close to about 48 crore Jan Dhan accounts, I think maybe as on last month. But if you really look at the success of UPI, Jan Dhan accounts has been one of the key factors that has kind of resulted in the success of UPI. So UPI, these Jan Dhan accounts have helped the proliferation of UPI. But UPI itself has been one of the outcomes of the digital payment infrastructure itself. So, and there have been significant innovations around UPI itself, and UPI, NPCI continues to innovate around UPI, right? And you have almost a new product coming every quarter, if not every month. So, and most recently, just about a week back, RBI has enabled loan accounts where you can transact through UPI. So you have your credit lines which can be utilized through UPI itself. So I think that is the second thing. And third, I think, is a very, very insignificant thing, or a significant thing, so to say, but which all of us ignore, and which I think Akshat also mentioned, is the QR code, I think. Which, all of us, it's part of our daily lives. But the innovation or whoever created the QR code, I mean, the kind of impact it has had, the kind of, reach it has had with different strata of people. Today, I mean, we can't imagine doing an instant payment without a QR code. I mean, you can, but most of us, kind of can't live without a QR code now. So yeah, I think that is
very true. I mean, there have been a rage about how QR codes are actually being carried by the vegetable cart vendor or the auto rickshaw guy. Or no, I guess one can't agree more that, in fact, going back to the reference we make in the panel this morning, we had Shekhar from Kotak talking about what he called as JAM, right? The Jan Dhan, Aadhaar and mobility being the three pillars of what this innovation has been about. But I want to bring this question back to you, Akshat. And you talked about how things have evolved over the centuries, but we now have the next quote unquote innovation on the digital rupee that's coming up, right? So how could that impact, in your view, both the instant payment space and more specifically on, the payment space and more specifically impact the instant payment space?
Yeah. No, I think e-rupee is a very fascinating debate, right? Because if you look at what has been achieved, from 1 billion transactions, we've gone to 10 billion thanks to UPI, right? And you would think that, a lot of digital payments are now happening on these platforms that have been enabled, the infrastructure that has been enabled. But if you then step aside and say, hey, what's happened to cash, right? Cash was 17 lakh crores pre-demonetization. Where are we now? We're double of that. We're 32, 33 lakh crore of cash even now, despite all these transactions happening. So there is something which is missing, right? And Mr. Manish alluded to that. The whole digital ecosystem brings in traceability, right? Helps you immensely. But there is still a segment which is saying, hey, I don't want this traceability. I love my cash. I want to spend it. I don't want anybody to monitor it, where my cash is going. And for RBI, this is a big problem. This is a 5,000 crore problem. Printing cash a year is 5,000 crores for them. If digital is not going to take it away and people still want anonymity, right? The whole thesis is, can we bring in something which brings that anonymity and also moves in with the time of crypto payments or blockchains, right? Which is where the whole e-rupee has come in, saying, hey, we'll have a central blockchain currency on a distributed ledger. But the only difference is going to be, from a cryptocurrency, there is going to be a central regulator managing the flow and supply of funds. So they're creating a two-layer almost ecosystem, which is saying that, hey, we will give you wallets to everybody. You will have money in your wallet, and central bank will basically be the custodian of that money and decide that, okay, if you were getting 50,000, I mean, they're the ones who are sort of saying, okay,
I promise to pay the bearer the way you actually read it in a rupee note in any case.
Yeah. What's that?
I promise to pay the bearer of this note.
Yeah, correct. Exactly the notes, right? And what you do with that money is not something which is going to be traceable by any bank, right? So you can go spend that money, and that portion of your wallet is going to be managed by the distributed ledger. So your, whatever transactions you've done is basically managed by the distributed ledger. No bank, no intermediary has access to that. That's your cash, non-traceable. But at the end of the day, it's going to be something they hope will replace the cash. I mean, that's how I am seeing it. And essentially, it's very fascinating to see how this pans out. Obviously, they're in pilot phases right now. Correct. And adoption of something like this, if it's not in tier 2, tier 3, tier 4 cities, is going to be difficult to sort of replace cash.
Do you see this reviving the wallets again?
This is a wallet.
This is the wallet.
This is the wallet.
Definition of the wallet, yeah.
Because essentially, I mean, it's funny because they moved away from wallets and they sort of brought in UPI.
Correct.
But now they're moving back to a system which is wallet and almost giving you anonymity and non-traceability, which is counterintuitive. But actually, if you think about it, it's a brilliant move.
Yeah.
How it pans out is a big question mark.
Is what we'll have to wait and watch. I'll take this question to Manish, and this is something which we do a lot of work around the world, right, at Cedar. And when we talk to bankers outside of India, there is actually a lot of let's say, anxiety or excitement, the way you look at it, about what UPI will have to do or what impact it has to have on cross-border, transactions, right? And with UPI being accepted or let's say being participated in by more and more countries around the world, what impact would you foresee on cross-border payments particularly?
Yeah. No, yeah, I think it's quite fascinating. I think, and as I was mentioning, I think it's probably the first time that India is really taking a lead, in bringing about a technology which really shakes the payment systems across the world. And I think, obviously, and what I understand is I think NPCI is actually proactively, targeting other geographies and saying, we can offer the UPI solution, set it up for you for free, just to encourage, sort of more appreciation and acceptance of the UPI platform. So obviously, from a customer perspective, it will make things far easier. I mean, the remittances can be faster. They can be more predictable. People can probably manage their accounts overseas as well as in India much better. But I think a fundamental thing from our perspective will also be that, I think this may encourage more transactions in the rupee. And I think rupee will also get a bigger status, I would say, as a global currency. I mean, I wouldn't say it'll start probably comparing with dollars immediately, but I'm just saying that it'll be another currency that will be in the reckoning. And I think that, is a bigger spin-off, for all of us. Because, first of all, obviously, I think that can probably lead to more flexibility on the capital account side as well. Because, then the government can manage its fiscal or, current account deficit specifically, much better. And, in that sense, there is no exchange rate risk, once you are sending the money out, that's something which the RBI can control. So I think it just gives a bigger prominence to India as a country as well. And I think that I see is probably, the biggest spin-off benefit that you will get. Besides the convenience, obviously, that their customers will enjoy. But, you have systems, I mean, SWIFT is now integrated in all banking systems. And SWIFT is, primarily running on those 3-4 legacy currencies, historically. And the ability for any other currency to really make a dent into that space has not been possible. Obviously, they've introduced CLS and things like that. But, still, most of the trade still happening in those currencies itself.
Correct.
I think this will really, this can really change that metric as well. Because, you can actually have an offering, which is probably superior to what is possible, through SWIFT or through CLS. And that's something which will probably, should drive greater acceptance of the rupee as an alternative currency. So you could actually get into CLS as a currency on your own, and similarly on the SWIFT, probably, there'll be more transactions. I think I see as the biggest sort of.
So that's a very, should I say, profound, point of view that you have just shared. I'm sure all the people in the audience there may be questions coming up later today, but I'll hold back on that, Manish, and I'll take this question to you, Manoj. And I'm going to just borrow from what Akshat was talking about, right? I mean, if you look at the kind of transaction volume of UPI we're dealing with, right? Every transaction calling as many APIs, and some estimation says that we actually almost have like 2,500 transactions every second. Just imagine, every second, there are 2,500 transactions being transacted somewhere in this country. And you pointed out, Akshat, that there is a lot of rails that have been laid, but there's a lot of technology behind it that's invisible, and there is a lot of effort that's gone behind or is working behind. Could you throw some light on what the technology is, for us in the audience, and to understand where we are heading in terms of that technology?
Yeah, so
at scale, I think that's the point.
Yeah, so I think this 2,500 that you mentioned is just couple of months back. If you look at the March numbers, it's 3,000 transactions
there you go.
per second. So, that really kind of explains the scale at which the UPI transactions are growing. So, indeed, you have close to about March, we had 8.6 billion transactions that were done. If you look at January numbers during the COVID times, from Jan 21 to 22, the number of transactions doubled actually. And then in the last 1 year, it's grown about 60-70%, but obviously with a higher base. So that, if you look at now, about 75-80% of digital retail transactions are UPI transactions. I was just I heard one of our Indian cabinet ministers quote in the World Economic Forum that if you look at the value of transactions on the instant payment platform in India, and if you compare with US, UK, Germany, and France put together, so you take all these 4 countries, take the value of these transactions and multiply by 4, instant payments in India is much more than that. So that's the scale at which we operate. And from a Kia perspective as well, I mean, we do about 8-9 banks. We process close to about 25% of the volumes on UPI today. And there's a lot of heavy lifting that goes behind the scenes in processing. Like Akshat already mentioned, there are about 10 API calls just to kind of service one UPI transaction. And what also kind of complicates matters a little bit is that UPI is almost as kind of, it's not making money for banks, right? And so banks are kind of cautious in investing into technologies for UPI. I'm not saying they're not investing, but there is a kind of guarded response to investing. So as technology service providers, our challenge is that we've got to kind of keep innovating. There is the investments on hardware are, it's difficult to get those investments, but so we need to keep innovating on the product side. So that's really one of the biggest challenges, and there is a lot of monitoring. And it's good from a consumer perspective, right? If you look at, there's so much of monitoring from NPCI, from MeitY. There is every technical decline, every downtime, everything is tracked, everything is questioned. So there is a lot of kind of checks and balances that are there in the system. So having said that, I think the volumes are only going to grow. NPCI itself has set a target of 1 billion transactions a day, which is in the next 2 to 3 years. So we are about 30 crore right now to about 100 crore a day. So it's 3x in the next 3 to 4 years. So and it's 100% going to grow. If you look at the kind of products that NPCI is coming up with, if you look at credit card on RuPay, or if you look at most recently now, the loan accounts which you will be able to service using UPI or UPI Lite, all that put together, I mean that we are going to just reach that target sooner rather than later. So that's the most kind of, it's going to happen very soon. And I think it's up to technology providers. I mean, we need to keep innovating. And so there's a lot of innovation happening around microservices architecture, containerized applications. We've recently moved our switch now to a completely microservices architecture, a complete containerized solution. So there's a lot to happen. It's very exciting and challenging as well.
I was just going to add one quick thing to what he said, right? It's fascinating that it's not the cost of doing any business right now, it's the cost of not doing it. Can the banks afford not to do UPI despite the cost, the cost structures not being there for them? Yes. Because imagine if ICICI stopped doing UPI, all the other banks are going to be super happy, right?
No, I guess it's a measure of opportunity cost versus real cost, right? And I think that's the game at play here. But I guess there's a lot of discussion about what the projections are and what the real volume is. And as you say, the future is landing even before you expect it in terms of scale that you're seeking. I mean, what does this mean for, let's say, the opportunities that are laying ahead of us, right? I mean, there were some discussions in the morning that we had where somebody talked about how we actually see digital lending actually becoming critical because payments data serves as a very important fuel for driving, let's say, credit quality, credit decisions and how that's unfolding. We had another, fireside chat that Nikhil was moderating on how unbanked segment is actually becoming more inclusive, right? So my last question is actually on those lines, right? I mean, and this is maybe a rapid fire, if I may say that, and then we could open up for questions from audience. If you were to pick, one, opportunity that you foresee that all of this is likely to bring to all of us in the future, what would that be? So you want to start with you, Akshay?
Yeah, I mean, see, again, as you said, the whole India stack, and as he also alluded to, the whole fact, the India stack has really enabled the payments to be at the core, right? And with payments and everybody doing digital payments, and hopefully the traceability remains, right? Because what that does is gives everybody this whole digital collateral. So a chai wala or a vegetable vendor has a digital collateral saying, hey, this is the amount of transactions I'm doing. This is my daily galla, right? And this is basically how much I'm doing and the historical relevance of the whole thing. Now I don't need a credit score to underwrite him. Lending is by far going to be one of the biggest winners from the payment space, right? And even if payment is not making money, and payment is essentially more sort of the data store for a lot of the banks. No bank will, stop doing UPI or enabling these payments, because the amount of data they can get from this to in turn use it as data collateral and lend is going to be immense.
Fair. No, I think there was a comment this morning, someone was indicating that credit to GDP is at 40% and it is likely to go to 100. So we're talking about 2.5x improvement in digital lending. Thank you, Akshat. If I take it to you there, Manoj.
Absolutely. I think the amount of data, like Akshat mentioned, the amount of data that banks hold today, the payments data or the transaction data, that's invaluable. I mean, absolutely. And if you kind of just put an analytics engine to it, and if you kind of have the right ML platform, you kind of can get a very significant inferences from that data. And that can again, right, for example, right now people who have credit histories and transaction patterns, they are able to get lending done, but a chaiwala on the street, I mean, he doesn't have a credit score. So for him, I think this can lead to a huge kind of benefit from a financial inclusion perspective. I think that is something that is really going to be and plus the RBI thing. I mean, I mentioned this earlier as well, and I think we're just kind of probably not realizing or yet to realize the importance of the credit lines being exposed to UPI. And it can actually work like a credit card. Though we probably have to see how banks will provide a 30-day free credit and how the transaction points would be kind of taken care
access.
of. Yeah, but otherwise, I mean, it's that's going to be the next wave. So credit card and loans being exposed to UPI, I think those are going to be, really the next wave, I believe.
I could see Akshat already getting ideas for his next venture. All right. Manish, your turn.
Well, I think I agree that obviously the kind of transaction history that you're getting created, I think that's obviously going to be very useful for banks, because obviously, when historically, we have been looking at customer performance from a historical perspective at one point of time. So the balance sheet is as of 31st March, and that's it. I mean, we don't know what happened, and obviously the customers have their own interpretations of why things have moved in a certain way and all of that. So I think that subjectivity is taken out of that assessment, once you start seeing more granular data on their transactions. I think that enables credit monitoring better. But I think more on a broader level, I think it also probably will help the government or, to actually drive policies. Suppose you actually take a decision in the budget to say that, okay, should I reduce my tax rates? I think you can actually see the outcome of that. Maybe in the next 3 months, how does it impact the cash flows? Where are the money now going? Where is the money now going? I mean, is there a significant change in the consumption that the customers are actually doing, or is it going more towards investments? The more you get into situation where there is an audit trail of transactions done by individual citizens, I think, which was probably missing, historically. I think that will drive the policy much better in terms of, effectiveness. You will actually be able to monitor what is the outcome of your policies, and that will probably be a feedback loop for the governments to actually, fine-tune their actions going forward. So I think that will also be a big benefit that we could probably
That's a very interesting point. Better data, better insights, better decisions.
Yeah, you have this data, and now you have this big data analysis capabilities, which probably earlier it was not easy for you to do it in such a desegregated fashion. But now you can do that. So I think, and I think income tax has already started doing that, right? I think they start looking at all your high-value transactions, and, they've asked people to confirm that, all these. So I think, but that means they're already proactively looking at all of their data. And I think that will be quite useful, I think, to just drive, the policies going forward. That, I think, it'll make the whole politics and all that, I think,
data-driven.
More data-driven.
Data-driven politics.
Yeah, so it'll not just be, empty promises. You'll have to demonstrate what you commit.
Well, we have time for just one or two questions. So anyone? I see one. Can someone hand the mic to him, please?
I think I've given my point of view from a FinTechs perspective, but I would like to hear from a banking and banker perspective. So this is a question to Mr. Manish. Do you see, I mean, with the digital intervention happening in a very rapid speed, do you see the bank's investment is going to be towards the branches or a technology stacks?
Yeah. No, so I think definitely the emphasis on branches will reduce. There is no question about that. I think the way I see it is that, what probably payments will now become more of a service. It'll not be a profit center for banks. I think historically, it was also a profit center. I think now banks will have to focus more on their, their credit capabilities, ability to manage the asset liability mismatches. I think that's what will determine how successful a bank will be. Clearly, I don't think banks, obviously, you will have to have some branches, because I think there is this mental comfort a lot of people get just by knowing that the bank actually exists. It is not just a thing on the web, because there are neobanks, right? I mean, which don't have any physical presence also, but I don't know whether there'll be that will appeal to everybody. I think so there will be some space for some branches, but definitely the number of branches will definitely come down. That's my view. Yeah.
One last question. Hand go up there, yeah.
Hi, good afternoon. Thank you so much for a very insightful session. I think this was, as an audience, I really enjoyed the discussion. You discussed about digital rupee, the impact of that, and we'll obviously see how that pans out. But as a banker, Mr. Manish, how do you think that will have an impact on, from a 10-year, 20-year perspective, on the role of a bank, right? So as we see today, for example, a Google Pay, which was a search organization, controls 40% of UPI market. So, and a bank is basically a server for them in a very layman's term, but it's basically a database for them. So do you think that the role of bank will change as we go ahead in 10 or 20 years of span of time?
Yeah, so I think that's what I was alluding to. I think the function of a bank as a store of cash, or storekeeper of cash, so to say, I think that will really diminish. But I think the banks will still continue to perform the other functions. I think the main function, or I think the critical function that the bank has to provide, is to manage the asset liability position. You are getting deposits which are probably short term, and you are lending long term, or vice versa. I mean, it could change in cases of certain banks, but broadly that is the situation. So I think how that function, I think the banks will have to continue to perform. Similarly, trade transactions, to give the comfort that you understand the risk of the counterparty better than the person who's actually doing the trade transaction. I think that's again a value add that the bank will continue to provide. So I think those kind of functions, they will have to continue to provide. But yeah, anything which is related to just holding cash, which was historically one of the functions that bank used to perform, I think is going to really diminish.
Thank you, Manish. I think at the end of this session, I guess all of us are looking to see what the new cashless, feeless, and now we're talking about bankless. I think we are moving in a direction which is all about more and more of less and less. So thank you, gentlemen. I think I really enjoyed having this session. So thank you.
So thank you, Ram, and everybody on the panel. That was very engaging. And since we spoke about QR codes, I just want to make a small announcement. There is a QR code on your table that talks about feedback. Let's use the technology. Give us some feedback in terms of how the sessions were, how the event was, any suggestions for improvement, etc. Let me invite Amit Jain, partner and co-head IBS Intelligence, to come and introduce his panel. Amit.
Good afternoon, everyone. I think I've been, since morning, there's one term that we've actually been hearing the most of. I think every panel, every individual spoke about that term. And I think that's the topic of the panel that we have today. It's about artificial intelligence, right? I think, every single person spoke about it, and I think it's important for us to actually coin it, and I thought about it right now. It's like advantage intelligence, right? So while it's artificial intelligence, it's really driving innovation and efficiency using AI and analytics, right? So I'll now welcome my esteemed panelists. I have there are some people who are joining virtually, and then there are some people who are with us today. I'd like to invite first Kaustab Laturkar, who is a Senior VP and Global Business Head at NSE IT. Kaustab. Kaustab comes with over 2 decades of experience, runs the digital transformation business at NSE IT. He's one of the founding members of, he was one of the founding members of Cognizant's artificial intelligence stream, driving market share across the globe. Welcome, Kaustab. I also have Raja Sundaram, who is the Director, Software and Quality Engineering at Explio Group. Welcome, Raja. Again, Raja comes with over 27 years of experience, and he's held leadership positions at Standard Chartered, Infosys, HCL, amongst others. Right? On the panel, I also have Lindsay Theratel, who currently heads RISE India. Lindsay has over 2 decades of experience in primarily running a FinTech mentorship program for Barclays. On the video link, I also have some members who've joined us digitally. I have Parag Deshpande.
Hi. Can you see me?
Yes, Parag, we can see you, we can hear you as well. Parag is the head of customer engagement at Axis Bank. He has over 23 years of experience and has held leadership positions at, obviously, Axis, Wipro, Tech Mahindra, among others. I'm also joined by Ratan Kesh. Ratan and Puneet. Okay, so we also have Ratan, who will be joining us shortly. Ratan is with Bandhan Bank. I think he's currently overseas, so he's joining us remotely. And we also have Puneet Bhasin. Some of you may know Puneet. She's an international cyber law expert, right? So I think as those members join us, it's a pretty large forum that we have today. So, please bear with us for a couple of minutes while the other members join in. But I think in the interest of time, I'll just start with our current panelists, right? Hello. Yeah. So, you know what, I took some time before I actually, when I was writing down on this topic, and I had some of my team members do some research and talk about, and my opening question to all of my panel members was supposed to be the importance of, how important is AI and analytics in driving innovation, right? But as soon as the first panel got over, I actually deleted that question because I think it came to, it was very obvious to me after A, B, C, D, E, and after the JAM session that artificial intelligence and analytics and data is indeed very, very important. So I think it's no point in me asking that question because the answer by all of them would be 10 on 10, right? So, but I yet have a set of few other questions. So if I may start with Kaustab. Kaustab, people use the term, AI or digital transformation quite interchangeably, right? So how are they different or how are they complementary? Any thoughts on that?
Sure. So first of all, thank you so much for having me here. So digital transformation and artificial intelligence, as you said, these two terms are typically used very interchangeably. But if you look at a digital transformation, I think probably digital is the word. If you kind of do a simple word cloud, you will see that that's a word that is getting used the most often today. Digital transformation is a world revolution, like the inventions of steam engines and all of that. That's a world revolution, right? In simple terms, digital transformation is all about reimagine, reinvent your business using technology. And that's the reason digital has kind of gone out of the server rooms into the boardrooms as a discussion, right? Now, as you really drive digital reimagine business, you look at the customer touch points, transform that. Then you kind of look at the overall customer experience and so on. At every step, you're generating data, and somebody mentioned that every decision is generation of data. And more data that you generate, whether it is structured, unstructured, in the form of videos and audios and this conference and everything, right? Every event which is data, you cannot really analyze, digest that data with natural intelligence because of the limitations of the capacity. So that's where you need AI. And if you look at artificial intelligence, artificial essentially will help you in terms of running the show without kind of getting exhausted in terms of the volumes of data. And intelligence is all about interpretation of different type of data, right? So digital provides data to AI, and data for AI is a fuel. And other way around, if you really look at, AI provides the efficiency which is required in the digital transformation. So that's how both digital and AI are fairly complementary to each other. So we should always talk about data for AI and AI for data, and that's where people kind of use this term interchangeably.
Thanks, Kaustubh. So AI for data, data for AI, right? So if I can extend this to Parag, if you can hear us. Again, especially from a bank's perspective, right? How are banks leveraging AI or analytics, to what we call enhanced customer, to understand customer behavior, for enhancement of customer experience and so on. So, from a bank's perspective, how are you leveraging that?
So all the banks are at a certain stage of their journeys, right? Many of the banks have already bought products which they thought that will give a omni-channel experience to the customers. So and then they're leveraging actually the whole data analytics, and it sits on top of it, and then utilizing the data that comes out, the intelligence that come out of data analytics in real time to service the customer or to anticipate and proactively service the customer. So I think that is, in short, if you ask me, a elevator pitch of what banks are trying to do right now, and each one of us are in this journey. So firstly, we started with offering the multi-channel engagement. So chat got added, then we're looking at, WhatsApp has been implemented, and then along with our MBIB contact center and branches. So we're adding channels almost every year, right? Multiple channels. Now the cross-channel visibility becomes an extremely important point. So that's where the data analytics comes into the picture significantly. How do I provide a consistent experience across devices of the customer, across the platforms, and across the customer touch point? If I were to kind of give you the use case that we want to implement or implementing. And to some extent, in many of the channels we have implemented, maybe a branch is the toughest channel to implement it, but because the branch interaction doesn't get recorded and not available to other channels. But all other channels, whatever interactions and insights that we got, we can extend it to other channels. Channel portability is important. So you start from one channel and you are able to continue without interruption to the customer. All this is use cases I'm talking about as omni-channel use cases, primarily driven by the data analytics that is sitting on top of, sitting behind it actually. And one more point where we're using, we have 56 use cases, by the way, out of which the one which have been kind of implemented is a 360-degree view of the customer, right? I can see all the relationships, I can see all the interactions, I can see all the broken transaction, if not every transaction, in real time, so that I can service the customer better. Then knowing their preferences is the second one. Behavior data, how do you behave, when do you call, when do you visit the branch, how do you use your card, when do you pay for your card. And the last is the spend patterns, how do you spend, how do you use your benefits, what form factors of benefits you like, whether you like reward points or a cashback or a voucher. All these are data that get collected, and then we can make an offer to the customer which fits their need. Also, the needs of the segmentation of the customer itself. traditionally has been affluent, super affluent, but we're also looking at Bharat Bank, or not just the premium affluent, but Bharat Bank. Within Bharat Bank, we look at the premium customers in the hinterland, okay, or also looking at a millennial and Gen Zs. I mean, just taking this as an example, but many such cohorts emerge, and we need to see what is the requirement of these cohorts for us to really make sure that we are engaging customer better there.
Yeah, that's useful, but I'm also hearing that a lot of it is with some backing of some very, very strong technology, right? So if I come back to you, Raja, on while we've been hearing some real delighted customers using, banks have been using data and analytics to have some real customer delight. So from your perspective, from a technology solution provider's perspective, how do you see it transforming or driving innovation?
Sure, a good question. The main thing that I see is that a lot of customers whom we have been servicing as a solution provider or kind of like service provider, we see that the technologies do cost a lot, of course, and there is a lot of responsibility as well, social responsibility and sustainability and environmental and other related services, depending on the regions. But the main challenge that what we see mainly when it comes to digital especially is that one is the technology change management, because the technologies keep changing every day, and you have to pick up and use the right one, and you have to run with it for a long time. And this is one common challenge that they have facing. And the other typical challenges that they are facing is mainly some, I think we heard in the morning, the security, because I chose this technology because it's cutting edge. But unfortunately, it is so cutting edge and it's so bleeding that I suffer a lot, and because I lose a lot of money. And other third aspect is that when I do this technology change management, my sprints, I have to change a lot, my stability of my, to meet my business requirements. Instead of the technology helping me, it's limping me. So these are the typical challenges. So this is where we come into picture. But in overall, if you see that, as you rightly said, there is no digital without AI in the future. So we see that digital is going to be more AI-driven, more AI, and that responsible AI is basically what we are explaining, looking at currently, and mostly explainable AI, because AI is now, they are going to operate in you saw that how autonomous ChatGPT is. It's just a tip of the iceberg, what you saw in the ChatGPT. A lot more things to come, actually. There are a lot of much better solutions, much better, deeper LLMs, large language models are there in the market, but they have not taken the front seat like ChatGPT as now. So what you saw is only the tip of the iceberg. As a technologist, this is what I see. So all this autonomicity leads to a lot of decisions being taken by the AI systems, like it or not. But when these systems do take this thing, how are we going to create a governance? So this is where the data is going to come into picture. So this is where the data analytics comes into picture. This is where the data provides you the kind of governance. Explainable AI comes into picture. Responsible AI, sustainable AI comes into picture, where every decision that is taken autonomously, there must be a traceability, data lineage, because of this rule or because of this method or because of this algorithm, because of this particular situation, I took this decision. So this is what is the basic principle of common or complex event processing that's going to take in most of the analytics stuff. I stop here.
So I think what I picked up, and my next question to Lindsay is, what you said, all digital banking is AI and all fintech is AI, right? So as Lindsay, for you, you've been running this mentorship program at Barclays, and since all fintech is AI, what's your guidance to fintechs, and how do you mentor them to leverage the opportunity that's thrown out there for the fintechs that you're mentoring?
All right, just to clarify, it's not just a mentoring platform, but what we have is an engagement platform, FinTech engagement platform. And as a bank, I think they've already outlined several benefits for a bank to work with AI, right? So what we do with some of these fintechs is help them understand what are the opportunities in the first place. I think it's very important to also not just create solutions for, for the market, but also be very clear on what are the problems that you're trying to solve. So the way we would work with fintechs is that primarily work to bring some of these opportunities to them. And digital transformation is very important. I think when we talk about digital transformation, it's not just a customer that we have to touch. It's also the employees, right? One of the initial use cases that I was working on in my career was that an employee is complaining that when we are working with Excel, it keeps crashing, right? And I'm not talking very, a decade back. It's just few years back that I heard this problem statement. So employees are also struggling. So how will you make customer experience better? You will be able to do that only when your employees themselves have the best solutions equipped, right? So a lot of things that we work with FinTechs is to understand what can be made, what can be done to make our employees' life better. Be it automation, be it, I think he's used several terms. I also want to add another term, which is ethical AI, right? In addition to all the different AI, we also have to think about the decisions that are getting taken by some of these AI bots. Are they ethical or not, right? So that's also another element that we have to keep in mind. So these are few things that we keep experimenting with FinTechs, and what the major recommendation that we have for FinTechs is, don't try to be like the one-stop solution for all banking requirements. Be very focused or have niche skills. Go deeper because integrating with a bank on any solution is not easy because of the legacy challenges that are there. So it's very, very important to have very modular approach when you do approach a bank. Maybe this might be very contrary to all the 360-degree view discussions that keep happening, but it is very important to look at a very modular approach to make changes in patches, and then have a more holistic view of things.
Sure, thanks. AI has had an impact, on, what we've heard, of course, on the revenue, but AI has also been having a lot of impact, driving efficiency or cost savings for banks, right? With this, I'd like to pull in, I think Ratan has joined us. Good afternoon, Ratan. Ratan is an executive director at Bandhan Bank, having 28 plus experience across organizations, including ICICI Bank, HDFC, Yes Bank, and Axis. Ratan, very timely, and one of the questions that, one of the points that we've been discussing around revenue enhancement using AI and analytics. But my point that I wanted you to throw some light on is, how are financial services organizations using AI and analytics to streamline their operations and perhaps reduce costs and result in some, there has to be some savings that all of these technologies result into, right? So what role do AI or analytics play in helping banks achieve that objective?
Sure, thanks. My apologies for joining a little late. In fact, since Parag is already here, probably I was not needed to be part of the panel. Parag was, and we were working together till some time back. So quickly, I think I'll touch upon a couple of aspects. One, clearly, look, if I'm a bank, I'm a pure digital bank, then there is not much of a, am I audible clearly?
Yes.
Yeah. So then it's like I go to the YouTube and I keep watching Lionel Messi. It keeps giving me all the analytics to keep throwing what all I can see about Lionel Messi. But since we are bank, we are actually multi-channel. We have got a whole bunch of digital and physical channels. And to bring science to all of these, yet go back to the customers with a proactive and reactive responses is the real challenge. And therefore, our ability at one side is the channel. Second layer is the channel-led systems like the CRM, the call center, the chat, email, etc., and then the core applications. So AI can play a significant role in really bringing what Parag was talking about, multi-channel, omni-channel, real-time capability, and at the same time can bridge the gap between these three sort of layers. I'll take two examples to convey what I'm saying. Number one, for example, if I know that one of my customers have bought a ticket from Make My Trip using my card, now I know that the customer is buying a ticket. Therefore, I have a capability to go back to the customer and say, hey, you're buying a ticket, you must be traveling. If you're traveling overseas, can I give you a Forex card? Can I give you an insurance for travel insurance? Or would you need a personal loan for a short-term funding? Now, these capabilities can be one of the ways to look at it as a more proactive customer experience, which therefore, operationally, it's a lot easy for me to do. Not only that it helps in business generation, but it also helps me operationally to reduce the friction and the operational work at the back end. That's one level. Second, let's take, for example, a customer of mine is trying to use the ATM, withdrawing certain money in the ATM and is inputting the wrong PIN number 3 times. Can I go back to the customer and tell that, listen, you are actually inputting the card number wrongly, PIN wrongly, and therefore I avoid 3 things. 1, customer is happy because I go back proactively. 2, customer doesn't need to call up my call center. And the call center, if there are abandoned, the customer gets disconnected and then he sends an escalation. So I end up spending a whole bunch of money and create customer dissonance. But the third one is even more profound, which is that assuming that a customer is actually an existing customer on mine and the customer has a re-KYC pending because of regulatory reason, I may need to freeze the customer's account. Now here is the situation when the customer comes to buy one more product to any of the channels or for some service which requires me to collect the customer's KYC documentation. Can analytics throw to the channel saying that yes, we already have the customer's document or you are collecting a fresh set of documents and go back and remove the re-KYC flag across all systems and only collect the incremental data, incremental document, which brings a whole bunch of efficiency at my operation channel as well as customer experience improvement. Of course, there are a whole lot of other things that I do, like for example, account opening today, we do almost 50% STP, which goes through 64 validations done using analytics and AI across multiple channels. Those reduce the requirement of physical verification, etc. So these are the benefits in terms of both business as well as operation, resulting into customer experience for sure.
Thanks, Ratan. While I do have a question around use cases, but I also see that Puneet has just joined us. So welcome, Puneet. Puneet is an advocate and an international cyber law expert. She's working across various domains around cyber crimes, e-commerce, legal, and I know she's been talking a lot about ethical AI, and I think very timely because we just alluded about it on about ethical AI a little while ago. So Puneet, as you've just come online, my question directly posed at you. The ethical use of AI is an important topic that we've all been discussing, right? And what measures or just talk to us a little bit about from the role from a regulatory standpoint to ensure that the AI it's not getting exploited or misused, right? So what are your thoughts on that?
See, the first thought that I have is yes, AI is a big buzzword which is growing everywhere, but you need to understand it's still unregulated. The question of liability in case of lapses in AI is still questionable. Are you going to hold the organization liable, the programmer liable? How is it going to work? Like, I'll just give a simple breakdown on how AI works. A very, very simple breakdown. So AI probably has a way more complex working, but just for the audience to understand, if there is a program, let's say that says that in the situation of ABC, X should be shown on a screen. In the situation of EFG, Y should be shown on the screen. Now, let's say there is a program of this nature. This is a very basic level of artificial intelligence. However, if due to whatever reason, which is not man-made intervention, the system makes an error. So where instead of ABC corresponding to X, ABC becomes Y, for reasons where it has happened also in past and does not involve direct organizational intervention, then the question of liability is a big one. So whether the question of ethical, unethical, the major issue that I feel with AI is the issue of liability. Then the question of it whether being ethically used, how it is being used, even to determine something being used ethically, there has to be a law in place to regulate it, to define what is it that you're calling as ethical use of AI. And in the event of unethical use or AI crossing certain boundaries, what would be the liabilities? Now, I'll just give you a simple example. Like this is not a case of now. Like we are discussing AI in India right now, but around 20, 25 years back, there was a case where a very famous footballer. Now, this footballer is very well known for his campaign. He was very well known for his campaign with respect to medicines related to diabetes and sugar-free candy, sugar-free sweets, and the whole movement of sugar-free products for diabetics. So he was a very well-known footballer, and he had openly come out with the fact that he suffered with diabetes and was promoting these products. Now there was a football match that was going on, and ladies, people in the audience, everybody, and one particular lady also in the audience who was present. Now, if you know, whenever you're seeing football matches, so even in India now you have this where in IPL, etc., you see different advertisements playing on the ground. So let's say if a particular player is a brand endorsee for some particular product, you see that the moment he will hit a six, in the background some ads start coming, on the ground some ads start coming related to that. And that's actually a projection, ad projection. So this is the same thing that had happened in the United States 20, 25 years back when they had the same technology in football matches when, if the player hit a goal, then immediately, on the ground itself, the projection of the ads used to start. Now, it was a very simple math that whenever this player plays, there were certain candies he used to endorse, which were sugar-free, and those ads used to play on the football field. Now, on that particular day, when he hit the six, there were some ads of candies which were there on the football field. Nobody tampered with the program, nothing happened. Now, post that, within 1 month later, he was sued. Now, he was sued due to the condition of a woman who was suffering from diabetes and ended up consuming the candy whose advertisement was there on the ground. Now, interestingly, that candy was not sugar-free. The AI program which was there did not support with this player, this particular advertisement should be displayed, but it got displayed. There was no answer as to how and why. The program did not seem to have an error. The logs did not show any intervention. So a lot of question marks which were there, and this man was sued for over $3 to $4 million because she was very critically ill. So she consumed those candies believing, he's normally a brand ambassador of sugar-free products. So when we are talking about AI, the basic issue that we come down to today, especially now since in India we are considering AI, so we need to consider those issues that have happened in countries which have already adopted AI in the past, where the first issue to be addressed is liability. So would you consider the footballer liable? Now, if he is not liable, or as a brand endorsement, he is not liable, then is the company which was providing this AI service in the football match liable? Is the programmer liable? Is the person running the system at that time liable? And a computer, how can that be liable? So there are so many issues that come up, which in my opinion need first addressing from a legal and technical standpoint. And then comes the actual usage of AI.
Sure. No, I think this now opens up us, in terms of the challenges that AI has, but if I go back to cost of view, we spoke about, the challenges that AI brings, but, why don't you talk to us a little bit about the use cases that, and how organizations have benefit, obviously we want to remain, we want to be the ethical side of AI and not go into the unethical side of AI. So from the use cases perspective, could you talk to me a little bit about, and what, are organizations seeing the real benefit of AI? So, talk a little bit about that.
Sure. So before I kind of get on to the use cases, just based on what my co-panelist was talking about, I will just add to that is, if you really look at the ethical AI, and again, we are talking about that, the underpinning data that exists today, even in the public domain, it is so much biased that, I mean, if you really go to Google and just kind of type carpenter or CEO or grandfather, grandmother, whatever, right? So you'll actually see the data in the images. Those images are also completely biased towards a gender or a race or something like that, right? So, for example, if you type, say, whatever, riding a bike or something, you'll see all images which are men, right? Or if you type CEO, you will see 60-70% of images which are more, inclined towards men and all of that, right? So the publicly available data itself is extremely biased. So back to the discussion that we're having in terms of making it very ethical in nature, I think there is a long way to go in terms of the usage of AI out there. Now, coming to the real use cases and not really treating AI as something which will solve all the problems of the world and all of that, right? In reality, what, in my experience, and again, the panelists can also add to that, is few of the use cases, I think, during the day, I'm also hearing a lot of these discussions out there. So I think you talked about the lending part and, the lenders kind of getting benefited because of that. So if you look at digital lending, is a classic example of a digital transformation powered by AI, wherein we are seeing the typical use of AI to acquire more and more customers on the digital channel out there, right? So, I'm talking about one of my customers in the past where the entire lending was happening in the typical brick and mortar type of a fashion. And after the digital platform, which was completely powered by AI, now they're acquiring 70% of their customers using that platform, which is completely machine learning and all of that enabled, right? So that's one type of use case that we are seeing. Again, with the bankers out here, the typical banking related issue that many banks are actually facing is the customers are having, or for example, some banks have the customer to product ratio, which is low, right? So, number of products owned by customers is lower than some other banks. So how do you really look at improving that type of a ratio and sell more products to the same customers? So when you bring data from all the channels together, when you bring in data from social media, the preferences that Parag was talking about, bring all 360-degree data for that customer. And then you'll realize that the behavior and the pattern of that customer is very unique. And based on that, rather than talking about a typical segmentation of 4 to 5 segments, one of the clients that I know was able to create 15,000 micro segments within that, right? Imagine the data having so many segments, which is where you're able to very clearly innovate and offer some specific set of products. And the world is very clearly moving towards segmentation of, as I call it, as n equal to 1, right? All of us individuals are one segment in ourselves. So we all will have in some day products which are meant for us, right? And standard products, standard banking products which are meant for us. And similarly, while this is not related to banking, but clearly the life sciences industry is moving towards creating medicines for individuals. And that's all about this, right? So hyper-personalization through AI is a classic use case that we have seen to acquire more and more customers as well. And the third one is, I think, the panelists also spoke about how to really reduce, optimize the cost. If you look at multiple channels, the call centers, and what is your digital leakage if the journey is broken when you're calling a call center and then you come to the branch, right? So eventually, this is all kind of, coming up together in terms of the business use case. So eventually, while the branches will not be there, but if at all, when you enter the branch, they will recognize you as a person, right? Based on that, they will connect your image back to their complaint system and find out in terms of, did you launch any complaint few days before? Where was the digital journey broken? And your analytical engine should immediately tell you in terms of, for you to resolve the complaint, give this as complimentary offer. So by the time you walk from the door to the front office exec,
Right.
the entire details are kind of ready and you offer it right up and there itself. So that's the holistic experience that we are talking, and that's where the world is clearly moving towards.
No, I think I just want to test this with Parag. Parag, I'm not saying that whatever Costa was saying was he made up everything and he was lying, but again, from a customer engagement perspective, from Axis Bank's perspective, are you seeing that there has been quantifiable benefit? Is AI or analytics helping you to have higher number of products per customer, better cross-sell ratio, or are all of these metrics being tracked and are they on the upside?
I think attribution to a singular strategy might be a big challenge to do, but next best product definitely helps us to build a better penetration and better engagement with the customer. But I wanted to kind of take you to a little bit different point that you were making about the challenges.
Right.
I would say that you made a point about data for AI and AI for data. I would say you also need to think about AI for run the AI effectively. Today we launch a digital only, and digital first and digital only products. And have we thought about the unhappy path, or only we design everything from a happy path standpoint? Do you have people, when you launch this complex product, do you have people in the organization who can troubleshoot the problem? Because we expect the system to run in a certain manner. When it doesn't run, do you have people in the system who can understand where the problem is, troubleshoot quickly, and give a resolution back? I think there also you need to have the AI, right? Today, if customer is dropping a journey on a certain page in website, and then he gets a call, we get a call in contact center. Okay, we should be able to find out why did customer lose the point there. I mean, there are tools like Google Analytics, etc. But I think when you have a complex orchestra of the AI, products working with each other, there you need to have the clear, view to the front channels on where things might have gone wrong, and then therefore we are able to go back to the customer and solve their problem on the same call instead of, asking them to wait for 3-4 days. So I think these are areas where we really need to focus on, and always, Ratan has always spoken about BCP.
Sure.
When the AI doesn't work, I'm going to need a lot of people to do the same job which AI was doing. And I think in ops, that's a typical scenario when you have an unhappy path. So I think the important point here is, from a challenges standpoint, is can we have an AI for AI to make sure the AI runs effectively?
Digital banking without AI, fintech is AI, AI for AI. I think my last question, I think, Lindsay, to you, and it's a common question to Lindsay and obviously Raja. What's the one thing to watch out for in the next 2 to 3 years in this space, other than ChatGPT, that that you would like to add, or what's the one thing that's going to happen that you're excited about?
I think one thing that I'm really looking forward to is responsible AI. There are already so many terms used, right? So let me introduce one more. Responsible AI. Well, there is, I think lending is something that there's so much opportunity there, right? And so much has been discussed about that. But to really use AI in the right manner, it also needs to be responsible. And there are some very interesting solutions that are coming out, which is actually monitoring how lending is done, how certain decisions are taken, how the profiles are created. I think Kaustav talked about segment of one. Segment of one is very important, and it is made possible by AI. But at the same time, that can lead to a lot of biases in the decisions that are taken for lending, right? So how those can be made a lot more inclusive would be very important, and this could then form the basis for not just impacting cost efficiency. Usually AI is often spoken about in terms of cost efficiencies and improvements, but there's also a lot of opportunity to create new sources of revenue, right? And that is where some of these measures can really help. I think Kaustav again had talked about various use cases. But if you figure out the right model, the right formula, this is like a absolutely brilliant time to use AI. There was next best analytics that was discussed, right? But I've been speaking about next best analytics for 15 years. So it was not very effective then. So why is it effective now? Why are we seeing changes now? Why are we seeing improvements now? That's because the kind of data that is there, we are able to filter it better, structure it better, use it better, right? So it is very important that we also work with data in the appropriate manner, the right manner, so that we are able to benefit from all that.
Thank you, Lindsay. Raja?
Yeah, sure. So main thing that I see is that Punit's point is very valid. Who is responsible? I don't know what kind of algorithm they were using back then, but I don't think that in 35 years ago it was actually strong algorithms that what we have currently developed. If you look at, if you have to really implement a responsible AI, there must be a human intervention, or at least equivalent of human intervention. Somebody said AI for AI won't work. So again, the state-of-the-art technology is that you have to use reinforcement learning with human intervention, which is what ChatGPT is actually currently, if you see, or any large data model. So in order to ensure that we develop the legal, paralegal, and all these medical, paramedical kind of like brackets, in order to ensure that we have a safe environment, we have to create great awareness about the AI, first of all. And we have to ensure that the responsible AI come from the data lineage, and this decision was taken because of this particular reason. And with that human intervention, with reinforcement learning with human intervention, or you have a kind of like restricted, say, deep learning. Whereas when I say restricted deep learning, that's a new area where you have to have multiple layers in which one of such layers ensures that these kind of like basically ethical checks, and which does all these ethical and environmental and various other inclusivity checks and various other related data to be validated before it filtered out, before it spits out the result. So this is possible with the newer data science, with especially with deep learning and reinforcement learning, and more gamification is also possible. So this is what I see as the way forward. So one is there must be a great awareness, and there are AI advocates also coming up in the US, and these AI advocates, they speak pro as well anti, but the main important thing is that just like the free speech advocates, they have the kind of like clarity, that same clarity that we bankers and people who are the industry leaders need to have, that kind of clarity in order to choose when the say data scientist using that particular algorithm, just like a cybersecurity expert saying that boss, you are using a sprinter which is actually has a buffer overflow problem. In a coding we are able to say that very easily. So don't use a sprintf, it is actually buffer overflow problem has such. But the similar kind of like expertise, we should also have our CTOs and our people who are technology leaders have to avoid that kind of algorithms, to avoid that kind of, or have a kind of like governance around it. And this is where the data analysis comes into picture. This is where the complex event processing comes into picture. Tools like there are actually multiple tools. In fact, so these tools are basically like, for example, Flink can do a lot of complex processing with high-speed data that's coming as a streaming data. And when you do all these things online and you are able to introduce, or you have a maker checker, and if that is actually possible because you have to have that many number of human interventions to be possible, or you have some amount of filtering to ensure that there is a maker checker kind of mechanism, that is possible. So this is the only way out I see to create a very ethical and responsible AI.
Got it. Thank you. Puneet, some comments from you on what to watch out for in the coming 2 to 3 years?
Yes, so AI definitely is going to be on the rise, where a large number of industries are adopting this actively. So it's not just the finance sector, almost every other sector is adopting it today. The only thing, yes, that would be a matter of concern again for me would be that the technology is growing way faster, things are moving way faster as compared to the governance. So the same thing as what happened with the OTT platforms, already released content, already there, and then people trying to regulate it. The same thing that's happening with cyber crimes. And unfortunately, it looks that the same thing is what's going to happen with even AI in the long run. Until and unless, even the legislature is keeping pace with the technological developments. Unfortunately, again, if you see the way the parliament works, the way a democratic system works, is that a legislation has to go through multiple levels, and those levels take years. And technology is changing with snaps of fingers, with days. You see the number of platforms adopting AI on a daily basis is increasing. So starting from earlier on, it was only e-commerce platforms with very high budgets who adopted it. Today, you're seeing smaller budget platforms also profiling. A very interesting case I saw where there was a CEO of an organization where I was, having a meeting with him, and he simply had a small device kept next to him. And at the end of the meeting, that device, a lady's voice simply said that I've got it, and I was like, what exactly is that? And he told me, our organization, I will not name the organization, it's a very huge MNC. He said that, we are being profiled. So if tomorrow something happens to him, this virtual CEO understands his decision-making process, has that level of deep learning to act as the CEO in the interim till a replacement is found. So let's say if something goes wrong with him, he passes away, anything happens. So the organizations are having this kind of level of AI available with mitigation practices, and I was absolutely taken aback. But again, that raises a lot of questions on privacy. It raises a lot of questions on, how whether or not this is proper to do with employees, which was something which honestly I would say was my first concern. that if a person is carrying this device throughout to profile and, create a virtual CEO, yes, I understand the organization is trying to keep a buffer that tomorrow, whatever happens, at least, for the interim, they have, for their key stakeholders, key people, key organizational individuals, their organization shouldn't suffer. But there are lots of issues about privacy, lots of issues with respect to the data collection and the utilization of such AI that arises. So, yes, I do see this kind of profiling also happening further in future in a larger number of organizations. Maybe these were the few that have started it, but a lot of organizations may go that way, which will raise a large number of concerns thereafter and make legislation even tougher. A lot tougher, because however easy it may seem, today it is actually overlapping with privacy, it is overlapping with your right to life, it is overlapping with your constitutional rights. Multiple things getting affected with one single, you could say, one single activity that AI may do can actually go about encompassing into multiple legal domains. And yes, so the legislature has still yet to come to grapple with something like this. So can an organization even make an employee sign off on an agreement, an employment agreement, which allows him to waive off such rights? Is it even legitimate to have something like that? Considering the employee to be in a position of power, is such an agreement even enforceable? Ideally, it's voidable. It should not be enforceable. So there are so many things that are there in this, which I think only time will answer for.
So I think one definitely does need to be careful also, right? Any closing comments from Ratan and Parag, and then I think then if there is any time left, we can open it to the audience. So Ratan, your views on what to watch out for in this space?
So one, I believe that banking will become more a lifestyle and therefore contextual banking than really those brick and mortar banks that you go to. Take, for example, I want to buy a home and I don't necessarily need a home loan as a product. So as part of my home buying, I would have somebody helping me to do the shortlisting of the possible potential houses that I want to look at. That will be done. And then somebody will come and banker will come and help me with the loan. Then probably somebody will help me to get me furnishing loan. Somebody would come and do event management for the housewarming part and all of that, blah, blah. So banking will become a bit of a part of the contextual ecosystem, and banking will come and insert at different places. Sure. And as someone said that next best product was popular, it was not successful, but it is more successful today. Likewise, this will be a lot more successful. But in that scenario, what is going to be even more concerning is some of the panelists spoke about is the responsible AI. With the power of analytics, and I think all of us would remember Cambridge Analytica, the infamously famous the company, it has a capability to change the wiring of a brain. I think AI has reached a stage wherein it can potentially change how we human beings behave and make us more robo. And that is a real danger. And you have to really see how to really strike a balance between the two. I think that is the sort of trend that you need to watch out.
Got it. Parag, some closing comments? We've overrun our session, and I think we've done 40-50 minutes in driving innovation in AI and analytics without talking about ChatGPT. I think that we will leave it after for the next session. So thank you so much. I think it was an interesting and insightful conversation personally for me. I hope you guys enjoyed it. So thank you so much, dear panelists. Thank you.
All right, thank you. That was a fantastic day. Let me now call upon V. Ram Kumar, Senior Partner, Cedar Management Consulting, to come and give us a closing note while we are all again assembling. So, Ram, can you please take the mic?
Thank you, Ojas. I have to promise that what I'm going to speak now has not been written by ChatGPT. I think going forward, a disclaimer of this nature is going to be important. I don't know, we didn't speak about that, Amit, but with AI for AI and everything being automated, I guess we are in for what we would call as uncharted, unknown territories. It was not fair, Amit. I think you left us all with a scare there. But I want to take this opportunity to, obviously thank everyone who's joined us today. I think it was a very fascinating day with some very interesting, important takeaways. We started the day with, the whole discussion about digital banking and the evolving era. There was some interesting comments about FinTech investments and how it's driving innovations, and we talked about both debt and equity playing a role in the way, investments are happening. We also talked about how digital banking and particularly UPI is actually driving financial inclusion, driving transparency, driving the data, helping us make better quality decisions. I think that was also a fascinating takeaway. And then we had the famous ABCD. I don't know how many of us remember ABCD here. We talked about from artificial intelligence to blockchain to cloud to data. And then we had the jam session since it was breakfast time. So we had from Jandan to Aadhaar to mobility. So I think it was very important takeaways. And of course, there was, me personally, I think, I was very, very impressed with that insight that, the whole concept of credit to GDP ratio is likely to move from something like 40% where it is today to something which could be as good as 100% as a country. I mean, that could mean it has significant implications to all of us in various shapes and forms, right? And then we also talked about technology and how it's an opportunity cost for banks to actually, not participate, and therefore the investment they're making is but inevitable. And the famous 3,000 transaction per second, volume that we're dealing with as a country in the way we're dealing with UPI, I think that was important. And of course, I quite like the way we had this phrased that the next best analytics has now come of age because we have data come of age. So I guess that's an interesting way to conclude the discussion today. As Cedar and IBSi, I mean, obviously we have a lot of understanding and we continue to operate in this ecosystem because not only does, Cedar from a consulting, perspective and IBS Intelligence from a research perspective, but also the lab that we run, which is actually ecosystem of fintech players, and the Cedar-IBSi FinTech Capital, which actually is into ventures, venture capital. We clearly are seeing the ecosystem of digital banking and fintech evolve globally and in India. And today's discussion was obviously just making it, should I say, an icing on that cake. I would like to thank our sponsors for the day, Cloud4C, Kia.ai, and Explio who have been our gold sponsors for the day, and both Clarify and Tag IT, who have been our ecosystem partners. So thank you, sponsors. I also take this opportunity to thank all our speakers who actually, I know some of you have taken very early morning flights to come from miles away, and some of you have joined remotely, and many of you who have been here, I guess it was all a learning for all of us. It was, you could be here, but honestly, it's not about just speaking, but also about speaking from a lot of your colleagues. And I'm sure most of you in the audience will agree with that. Thank you, delegates, for being with us and joining us through the day today. Hopefully it was useful, and there is some good learning and takeaway for all of us. Please do stay back and join us for high tea and networking. So, feel free to stay back and have some time, quality time interacting with all of us. And for all those questions that we couldn't offer the time, find the time for you to ask then. Your turn is now. You could actually get the time to spend with the speakers. Thank you once again. Let's put a hand together to celebrate this.